I'd like to call to order the Town of Fraser board meeting. Can I have a roll call, please?
Katie Fisher,
Adam Quickland.
Julie White,
Katie Souls.
Call to order the Town of Fraser board meeting. Can I have a roll call, please?
Katie Fisher, Julie White, Katie Souls.
Call to order the Town of Fraser board meeting. Yep. It's I got the YouTube video. Yeah.
And there's Lewis. Lewis Gregory is online.
Yeah, I'm here. I wasn't able to unmute, so here, Louis Gregory.
Thanks, Liz and Brian Sirkvenik. Can I have approval of the agenda?
So moved.
second.
Any further discussion? All in favor?
Aye.
Aye.
Any opposed?
Aye.
Okay, that was an aye for approval for Lewis. And can I have a motion to approve the consent agenda, which contains the minutes for April 16th, 2025, Resolution 2025-0502, contract with Ref Telus for the billing system review and audit, Resolution 2025-0503, contract with TFW Construction LLC for the Quail Drive water main loop, and Resolution 2025-0507, authorizing the mayor to execute an improvement agreement with Byers Peak Properties LLC for Byers Peak Ranch Filing 2, parcels 1 and 3.
I move to approve the consent agenda.
Second.
Any further discussion? All in favor?
Aye.
Aye.
Any opposed? Okay, motion carries. We'll move on to open forum. This is for business not on the agenda. If you'd like to speak, we'll give you 3 minutes of time. Please raise your hand if you're in the audience, or raise your hand online as well.
Are we gonna be able to make comments today at different parts of the thing, like being the housing stuff, or is that all gonna be just you guys talking to presenters again?
You guys could talk.
Okay.
I can take public comment.
All right, thanks.
Anyone online? Okay. Moving on to discussion and possible action regarding Call of Trust, Lorraine and Brett Parsons.
Good evening, Mayor and trustees. Lorraine Waters, Director of Finance. Questions were asked about Colorado Trust, so I asked Brett to come and help you guys all to understand exactly what it does. So thanks, Brett, take it away.
Appreciate it.
Good evening, Brett Parsons, Director of Investment Services for College Trust Investment Program. Thank you. Let me start my timer, otherwise it'll be a long night. Thank you for having me out tonight. I appreciate it. So I work for College Trust Investment Pool, and a couple of things we're going to go over tonight. I'll give a brief overview of the program. I'll give historical results for the town for the last couple of years, and then I'll give a short interest rate outlook going forward as you think about budget.
Just a moment. Can we confirm that Lewis has access to this because he was the one that was interested? Lewis, can you see these slides?
Yes, I can. Thank
Great.
you.
Thank you. Okay. Sorry to interrupt.
So as way of introduction, Director of Investment Services. So I hold a Series 65 and Series 7 license. I function as an investment advisor representative on behalf of the firm. And then my primary job is going out, client services, advising clients, new business development, all that kind of stuff, a lot of educational stuff like we're doing here tonight. So in the next slide, we have our usual disclosures. The main takeaways here: Call Trust is not a bank, number one, and number two, this is not legal advice. So make sure you consult the appropriate people if necessary to take action on any of the things we talk about. On the next slide, the purpose and structure of Call Trust. So what is Call Trust and how long has it been around, and what is the town's role in it? So in short, the purpose of Call Trust, which functions very similar to a money market mutual fund, is to provide an efficient mechanism for local governments to easily invest excess cash, earn a market rate of return while maintaining adequate liquidity. all without having to actively manage it themselves. So Colorado revised statute sets what local governments can invest in, and you can totally do everything on your own that we're doing on behalf of participants. It's just the reality is most finance directors don't have the time or the subject matter expertise to go out and do all this on their own. So they commonly pool their resources and do this work together. In the case of Colo Trust, the authorizing statute is called the Pooling Act. It's from 1985. So that was when the legislation was passed. That's also how long College Trust has been around. So we're celebrating our 40th anniversary this year. And then in the case of Town of Fraser, I pulled your historical records. Your resolution to join was from May 1989. So at this point, the town's been a participant for over 35 years. So I want to take a minute to acknowledge that and say thank you for your business and partnership over that time. Another thing I thought was funny, I saw this was on a memorandum from the 90s that was on town letterhead. And apparently the motto at the time was, quote, "Icebox of the nation." So I don't know if that's still used today, but I got a good laugh out of it whenever I was doing research for the presentation. So we've been around since 1985. We're the oldest and largest investment pool in the state. And I mentioned, really it's a mechanism to allow economies of scale and efficiency for local governments to invest. And whenever you're thinking about public fund investing, our goals are the same as your local goals. Preservation of principal, adequate liquidity, and then yield is the priority order for all public fund investing. And we'll talk about that more here in some other slides. As far as how it's set up and how it's arranged, the trust indenture is what authorizes and establishes the trust. From that point, it's going to work very similar to what you're used to here at the local level. So we have a board of trustees of the Colo Trust program. And very similar to here, they engage in contracts, they negotiate agreements, they do all the things that you're kind of used to doing in your oversight capacity on behalf of the program. A good example of what they do is, for instance, the Board of Trustees contracts with public trust advisors, that's who I work for, to be the investment advisor, fund administrator for the program, as well as do marketing, client services, a whole bunch of the functions that go into the program. And then we have an annual election. These are the current board members for the College Trust program. And you can see per the trust indenture, we have a representation from all forms of local government. So we have to have representation from municipalities, counties, special districts, K-12, that kind of stuff. As far as current participants, we're currently working with over 2,000 clients in the state. This is the breakout. And one thing I like to point out in the right side, sorry, there we go. In the right side, one question you're probably going to say is, hey, there's only 64 counties in the state. How do you work with 68? Great question. So in the case of the counties, oftentimes the public trustee's office has a separate Colo Trust account than the county treasurer's office, so they'll be reported more than once. School districts are the same way. There's 178 K-12 districts in the state, and then many, many, many more charter schools. We work with those individually because they maintain their own books, so we have numbers that show up a little bit higher than what you might be used to seeing in those categories. Then as far as the actual program itself, so I mentioned at face value, it works very similar to a money market mutual fund. So we're going to talk about the middle column and the column on the left. So both of these programs are what's called a stable NAV fund. That is the $1 per share investment vehicle. It's meant to, number one, maintain a share price of $1 a share, provide ample liquidity, and then, like I said, third, offer a rate of return. The third option on the right, that's a longer term investment vehicle called Enhanced Cash. It has a varying share price and the town doesn't participate, so I'm not going to spend time talking about that tonight. So in both Prime and Plus, and just to clarify, the town participates in Colo Trust Plus, which is our most popular portfolio. They're completely identical with the exception of what they are allowed to invest in. So I'll go over how they're the same. Then on the next slide, I'll say how they're different. So like I said, the purpose is short-term liquidity. These are going to be daily liquid. So we have an 11 a.m. cutoff. Whenever you need funds, you enter that withdrawal request by 11 a.m. Funds are in the bank via wire that afternoon. No minimum balances, no maximum balances. On our side, no transaction fees. That's all built into the expense ratio. Pretty straightforward. A couple of things that make us different than other options is for us, dividends accrue and apply daily. So it's not like monthly or quarterly, like some bank products or a CD would be. You actually earn interest and then take advantage of compounding that way. We have For both of our portfolios here, they're AAA M rated, and I like to clarify what that is. So that is a rating by Standard & Poor Global Ratings. It's called PSFR. It stands for Principal Stability Fund Rating. That is a forward-looking opinion by Standard & Poor Rating Agency for the ability of the fund to maintain principal value. We provide a weekly data feed to S&P, continually showing what our holdings are in the portfolio, and they continually look at the pool and maintain that rating. So I just like to point out that's not a rating that you're going to earn the highest amount of interest or anything like that with Call a Trust. When you think about the number one goal of what we're doing here is preservation of principal, that rating is directly attributable to that goal. The other thing about these, to be a stable NAV pool in Colorado, they have to be very, very, very short term. So 60 days or less weighted average maturity. And what that means is, generally speaking, all holdings in the portfolio would turn over very rapidly, no more than 60 days per the investment policy. That's also per state statute. In practice, it's very difficult to actually get anywhere near that high because we maintain so much cash to meet daily redemption requests. Those have a weighted average maturity of 0 or 1 day, depending on if it's cash or like an overnight repo. So typically for Call a Trust Plus, we have a weighted average maturity out of around 45 days or so, and then Call a Trust Prime would be a little bit shorter than that. As of yesterday, the daily yield for Call a Trust Prime is 4.23%. The daily yield for Call a Trust Plus is 4.38%. So 15 basis points or 0.15% difference. Depending on where we're at in the year and depending on market conditions, in my 2.5 years at Call a Trust, I've seen that spread be as wide as about 30 basis points and as narrow as about 10 or so basis points. So hopping into the two portfolios and going over the difference. Call a Trust Prime is what's called a government style fund. As such, it only invests in U.S. government treasuries, agencies, repurchase agreements of the same. So that's going to be items that have the full faith and credit backing of the U.S. government or the implied backing in the case of the agencies. So whenever you're investing in Call a Trust Prime, you're not subject to credit risk. So the government has always made whole on those investments since the beginning of the country. And that's the general standard of care going forward. Call a Trust Plus invest in those same things, but also invest in commercial paper. So commercial paper is going to be short-term, highly rated corporate debt offerings, primarily used to smooth cash flow and revenue or cash flow cycles for large corporations. So whenever you invest in commercial paper, as the investor, you're taking on additional risk. So you're demanding a higher rate of return. So the spread I mentioned between Call a Trust Prime and Plus is really just represented by the credit risk that you're undertaking as an investor. So the way that risk is mitigated is we have a team of 5 individuals for the company whose only job is credit research. So we continually monitor and maintain our approved list of commercial paper that the portfolio managers are allowed to trade in. We periodically downgrade corporations from the list if there's any indication of underlying financial stress with that corporation, and then also add new corporations to the list from time to time as market conditions warrant. A couple of names on the short list that we would invest in would be names like Apple, Amazon, Walmart, Microsoft. So very common large names like that, primarily in the US space. One thing I forgot to mention on the prior slide, we are the only fair value LGIP investment pool in Colorado. So what that means is we mark to market and reprice the portfolio at the end of each day. So if you're ever on our website checking out any of our portfolios, we actually calculate and publish the daily share price, outdate decimals, just as a transparency act for clients to see what the true detailed value of the pool is. And then in that total asset box, this is as of March 31st. You can see we had $700 million in Call a Trust Prime, over $15 billion in Call a Trust Plus, and then a little over $400 million in Call a Trust Edge. So as I mentioned, by and large, Call a Trust Plus is our most popular portfolio that the vast majority of our participants elect to invest in. Then this is just showing growth over the last couple of years. Obviously, with the high rate environment, plus a large influx of COVID money, coupled with rapidly increasing assessed valuation and property taxes, we're seeing balances increase on our side, just like fund balance and reserves are increasing with some participants. We just hit an all-time high a couple of days ago. I think it was actually this past Friday, we hit $17 billion invested in Call a Trust.
17, how much?
Billion.
B.
Yeah, with
Okay.
the 17 billion. Yep.
Wow.
So that's just the chart kind of showing growth. And then obviously, we've had significant tailwinds behind us with the rate environment. As soon as rates hit 5% again, interest in clients or increased participation among current clients has dramatically increased just because the ease of earning interest in a liquid portfolio. And I can't see this far, so I won't go over this much, but this is the detailed information for Colo Trust Plus over the last year. The real takeaway probably is if you're looking on the right side, top and bottom, our benchmark is going to be the 3-month Treasury Index. So in this case, you can see that Colo Trust Plus is a little bit higher than that. That's to be expected because we have the commercial paper exposure and the higher yield. If you were to look at Colo Trust Prime, which is that Treasury exposure only, you would see, or Treasury and agency exposure only, you would see those numbers be very, very similar to that 3-month T-bill index. And then I like to show this slide. This is actually from a slide that we use with prospective clients. This just shows a chart of if you would have invested a given amount of money in either of those portfolios throughout calendar year 2024, what you would have earned throughout that time period. And then what I really like is the chart on the right, participant investment income earned for 2024. So the sum of these three together, over $780 million. That's how much interest income went back to local governments in Colorado that participate in Colo Trust in 2024. So over $750 million of interest income for participants during that year. And then from here, we have a couple of slides showing FY23 and FY24 performance specifically for the town of Fraser. So in your case, we have what's called sub-accounts. Generally, they're aligned to either funds in your general ledger or specific projects. And that's exactly what you're seeing here. So you have the general fund, joint facilities fund, and those projects lined out. Beginning balance is going to be what you had January 1st, ending balance at the end of the year, and then the interest income earned for the period is the total amount earned for the year. So what I like to point out on here is, so you can see the average yield for the period. So this is specific to you. So this is taking into account basically all the debits, credits, and interest accrual and compounding that occurs over the year. And then if you're looking in the middle section here for the general fund, you're going to see contributions of $6.9 million, withdrawals of $6.8 million. This is good. This is what we like to see. So this is reflective of an actively managed account. That means that when the town has excess resources, they're moving them over to Colo Trust, picking up that interest. Whenever they have cash flow needs or high disbursements, they just move the money right back over to cash or the bank to make payroll, AP, those kind of disbursements. So this here is what we like to see whenever we're kind of looking at a client and talking about how you should be doing or how you should be managing Colo Trust from like a best practice side. The next slide is going to be the same. And you have to remember, 2023, high rates all year long. The Fed did the last rate increase, I think it was Q1 or Q2 of 2023. Then rates were the same all the way through September 2024. And then the Fed ultimately did 4 rate cuts at the December meeting, November, and December meeting in 2024. So you're starting to see rates tick down a little bit in the fourth quarter of 2024. But same thing here, you can see your average yield for the period, total interest income, almost $1.2 million of interest income for the year. So I didn't have a chance to pull your general fund budget, but I'm assuming that's a material probably line item at this point in the general fund budget. And the same thing, you can see the contributions, withdrawals going in and out, and what we would like to say is a actively managed account and a client taking advantage of rates while they're elevated like they are. And then looking at the rate outlook going forward, if I had 2 words to say about 2025 in general, I would probably say elevated uncertainty and increased volatility. So in times like now, this past month, great example, stock market sell off. We get a whole lot of questions from participants about, hey, how are you impacted by, the equities, by this, by that. The reality is we have no exposure to equities at all. So the stock market sell off really operates independently against the fixed income market that we're in. So when any sort of good or bad economic situation happens, to the economy. It eventually trickles down to business and all that. What we actually care about and what we actually spend the most time watching for is really that short-term commercial paper exposure among those client or among those corporations that I already mentioned. So it's one of those things we're monitoring ahead. We stay ahead of the rating agencies. So generally speaking, issuers of commercial paper, they would have S&P, Fitch's, Moody's, they would have one of these rating agencies or multiple rating them. We look at all their financial information before really it kind of goes to the rating agencies. And in any time in recent memory, there's been a downgrade among anybody that was like on our list of commercial paper authorized list. For example, we've exited that position many months or say a year in advance of an actual rating agency downgrade. So that's all we're really kind of seeing right now is just volatility in the fixed income and the rates. This is the Fed dot plot from the March meeting. So this shows I generally look at the green line, which is the FOMC members median rate forecast for the end of a given fiscal year. So if you think about the current target rate, 4.25 to 4.5%, what this is saying is the median rate expected by the FOMC voting members at the end of 2025 is a target rate of 3.75 to 4%. So that's saying 25 basis point rate cuts or 0.5% total expected throughout the course of the year. So that's one thing. So if you're thinking College Trust Plus is currently approximately 4.4%, back of the napkin math, start to think about, hey, what would a 0.5% decrease in interest rates at the Fed level do to College Trust Plus? And while they don't follow exactly, they are highly correlated between what the Fed sets as monetary policy and then ultimately what the short-term fixed incomes do. The real takeaway on this chart that I like to share is if you go out to 26, 27, to those out years, the Fed is not showing or projecting a very low rate environment. So by that, I mean anything like the decade following the Great Recession, where rates were, at 0, 25 basis points for almost 10 years. The Fed is really setting the tone and the narrative that the terminal rate, so the rate that is neither restrictive to economic growth nor too loose to allow inflation to get away, they're projecting it's going to be somewhere around that 3% range long term. So all things considered, if this situation were to play out, you would expect to see interest income at the local government level potentially still be a measurable amount and worthy of conversation here over the next couple of years. So this is the Fed. This is from the March meeting. This document or the Fed dot plot, it's really, I would say, accurate or tells their story on the day that it's published. Every day for the next 90 days until the next one comes out, it gets less and less reliable. So at this point, we're already 6 weeks after that was released. So just kind of throw it out to the side. As soon as we get a couple days past that, we start looking at the market-based probability of rate cuts. So what this chart represents is the Fed fund future contracts in the market as of this one right here is from February 28th. So this is a week old. So if you're looking at this chart, I can tell you that at the July 30th Fed meeting, the market is pricing in over 100% odds of a rate cut in June, a second cut in September, and then a third cut in December. I looked at these again this week, and they're already different. The months they fall are different. But the market is still projecting 3 rate cuts between now and the end of the year. So you kind of have the Fed saying, we think there's going to be 2. You have the markets pricing in 3. And then there's everything going on in the current market related to tariffs, the GDP growth that came in negative a week or so ago. Then we have bright spots like the April jobs number come in high or higher than expectations. So there's all this conflicting data points, all this conflicting information, and what we're really saying is just keep an eye on it. Keep apprised of the situation, and then like in the case here, if you ever have any questions, just call or reach out to one of the relationship staff at College Trust, and we can always kind of help walk through this and what it looks like. So that's all I had. I'm at 20 minutes, so I'm already a couple minutes over. I know you have a busy agenda tonight, but I want to open the floor for questions and see what I could help answer.
Yeah. Hey, Brett, this is Lewis. Can you hear me?
Yes, sir. How are you today, Lewis?
Good. Thanks for the presentation. I was curious about a couple of things. What are your fees exactly? And I guess what is your rate of return net of your fees?
Great question. So the fees are up to 12 basis points. So what you would call an expense ratio, kind of in mutual fund land, is our fee. So it's up to 12 basis points. And everything that we show publicly, everything that is on our website, everything I've disclosed tonight is all net of fees. So at the participant level, you will never see like any charges, anything like that. So back to napkin math, if you look at our published return, that would be net. If you added 12 basis points to that, that would be the gross return before the fees applied. Does that help?
Okay, so the 4.38 is net of your fees? Is
Yes,
what
that's
you're
correct.
saying?
Yes. correct.
Okay. And what, I was curious, what exactly, I don't know if you showed it or not, maybe I missed it. What does our portfolio look like? You say basically it's money markets, so treasuries, money markets, CDs, commercial paper. Is that kind of what the
Yep.
portfolio?
Yeah, that's exactly what it is. So we actually have another flyer. I don't have it on me, but I can actually share it with Lorraine and have her distribute. But it gives a pie chart. I think we do it once a quarter of what all's in each portfolio. So everything you just said. So we're going to have treasuries, agencies. We'll probably have we'll have some overnight repurchase agreements, a little bit of money market, other like AAA rated money market fund exposure. We can do negotiated CDs in Caller Trust Plus, and then like I said, we'll have that A1 and P1 highly rated commercial paper. And just so you know, in Caller Trust Plus, that is the majority of the portfolio. I can't tell you the exact number, but over half of the portfolio in Plus is going to be commercial paper.
Okay. And you
That-
mentioned earlier about no equities, but then you said something about Apple and other companies. Is that just commercial
That's
paper
commercial.
that?
Yeah, that is commercial paper in Apple, Amazon, Walmart, for instance. Microsoft, yes.
Okay. And one last question. Who are your competitors in Colorado and the other municipality, or do you have basically a monopoly of municipalities and counties and stuff in Colorado, or are there other players in the market?
Yeah, there's other players. So there's currently 4 LGIPs in the state. So there's one called C Safe, one called C SIP, and one called C Slip. They haven't really
That's a mouthful.
Yeah, it is. The oldest 2 would be Caller Trust from 1985 and C Safe. They're also from the 80s as well. So those would be like the legacy firms. I guess is how you'd say that. C SIP's been around for approximately a decade, and then C Slip launched this past year.
Okay. All right. Thanks, Brett. Appreciate
welcome.
the answers there.
You're welcome.
I have a question. So on the negotiated CDs, are those subject to the 60-day?
Yes.
Okay,
Yeah. Everything is subject.
every investment, that's statute.
And the important thing about statute versus the investment policy, state statute sets the limit for what you can do. And within the limit, the investment policy can be more restrictive than state statute, but not less. So generally speaking, we have components of the investment policy that are more restricted than state statute. But the biggest catch is going to be the 60-day weighted average maturity. And just to clarify for the group, the point of the 60 days is to limit your exposure to interest rate risk. The further you invest or the longer term your duration is, then the more price exposure you have to changes in interest rates. A study of this in real life would be Silicon Valley Bank. When they went default in spring of 2023, they did not go default because they had bad investments. They went default because the average duration of their investments was 20 to 30 years. And then the Fed undertook the most aggressive rate hike cycle in over 40 years, and they ended up underwater at fair value. So when there was a true run on the bank, they had to start liquidating all their treasuries, agencies, and these type things in the secondary market, all at a loss. An average loss of approximately 15% that's how volatile the long end of the curve is. So the point of the 60-day and less weighted average maturity is to limit that interest rate risk. A good example of it working in practice, and this is for money market funds and LGIPs in general, not just Caller Trust. If you go back to 2022 and 2023, like I mentioned, the Fed underwent the fastest rate hike cycle since 1980, I believe, and there was not issues in this whole space, like across the nation, Caller Trust, all that. If you go and look at the share price, they were all maintaining at $1 per share, which is really just a function of when you limit the WAM to a max of 60 days, you limit that risk and you manage it from there. But you can pretty easily maintain that share price, even in a rapid rising rate environment. Does that help?
Thank you.
Any questions? All right, well,
Thank you so much for your time tonight, and thank you for your business. We appreciate it. If I can ever help in any way, just reach out, okay?
Okay, appreciate it.
okay. Comprehensive plan, open house recap and next steps. Garrett and Cushing Terrell.
Good evening, Mayor and Trustees. Garrett Scott, Town Planner. Just wanted to introduce our consultant staff from Cushing Terrell. On the Zoom call, we have Nora Bland, as well as Art Melito and Honore Miller. So I will let them lead the presentation, and I'll just chime in as needed.
Thanks, Garrett. And are we able to share screen?
Yes.
Okay, I think Honore, are you sharing your screen?
I am not, no, and it's not a huge deal, but I'm unable to also turn my video on. But less problematic than being able to share my screen here.
Okay, great. You are
Yeah.
looking at
I think
that.
we just made you a co-host, Honore, so you should, we see the slides now, so.
Okay, great.
Great. Well, thank you so much for letting us give this presentation. I'm Nora Bland. I'm the Director of Planning at Cushing Terrell. I've met with you all before. I'm actually going to hand it over to my team because I had the flu during this event. So they put together this summary of kind of what we heard at the open house. So I will hand it over to Honore and Art.
Great. Thanks, Nora. Yeah, so we are here to just kind of give an update about the open house that we had. So just the agenda, we'll kind of review the project and engagement schedule, then kind of give you a little recap of the open house and some of the feedback we received, then talk about next steps for the project, and then we can move into any questions you guys all have for us. Okay, so we're here today kind of recapping the open house, which was on March 6th. We presented some of the findings from our existing conditions analysis, presented some of the feedback we heard from our first survey, and then collected input on some preliminary plan elements. It is May 7th. We're here giving you guys an update, some things coming up in the next phase. Gonna kind of present a revised downtown vision concept and some recommendations at the board retreat. Similarly, gonna kind of present the draft downtown vision chapter of the plan to the DDA board, and then moving into later summer, having a second open house with a second open house online activity, and then a few pop-up events to advertise the second open house. So yeah, the open house was on March 6th. The structure was we had 10 different boards set up at the rec center, 4 different stations. To advertise, we had a press release, put out these flyers on social media, did outreach to the website, newsletter, radio, newspaper, and we had about 45 people signed in, although definitely not everyone signed in. So I think we estimated it was about 60 people that showed up total. Yeah, and again, it was at the rec center from 4 to 7, and we had a pretty good stream of people the entire duration of that.
Honore, you should be able to turn your camera on now, I think.
Oh. Yes.
Great. Thanks.
Okay. Okay, so here are just some photos from the open house that were taken, just kind of showing some of the stations and the turnout of people. So the first station was kind of the introduction station and the kind of talking about the engagement and engagement findings to date. I was at this station and was mostly just kind of talking to people about, have you heard about the project? Do you know what a comprehensive plan is? Did you take the survey? And yeah, most people were just had kind of heard about the project and had come to the open house to find out more. A lot of people just kind of in agreement with some of the findings on these board, talking about, some of the existing conditions. This board was talking about the survey and community engagement findings, and then recapping our 7 focus groups. So yeah, and then people moved on to the next station, which was talking about land use. So we had a board for the town future land use. We had a board for the 3-mile future land use map. And then we had a board just kind of talking about what future land use is and some imagery kind of representing the designations, and what those kind of look and feel like. Some of the written feedback, we had an opportunity for people to leave comments on the future land use boards. And some of the written feedback was talking about family-oriented housing, affordable housing, providing, a mix of affordable products, the option of having kind of like tiny home areas, requiring developers to provide affordable housing, providing space for homeless, using Byers Peak Ranch as mixed use, allowing for higher density within downtown, kind of in the open space land use areas, just comments about natural resource preservation, wildlife considerations and corridors, and then the open space of Cousins Meadow and Jones Ranch. And then there were just some comments about connectivity, pedestrian walkways, making railroad crossings, and the capacity of US 40. Garrett was kind of stationed at this future land use station, so I don't know if you have any kind of additional comments of just people's verbal feedback to you.
Yeah, I mean, it definitely had great conversation with folks. I think it is always interesting, educational opportunity. I certainly heard from a lot of folks who either live or own property up in the Winter Park Ranch, Meadow Ridge area. Always, kind of surprised to learn, oh, this isn't actually town of Fraser. But some maybe key themes that emerged, some similar items of feedback, just questions around what the 3-mile future land use map really is for. Again, it's kind of somewhere in between a vision statement by the town and somewhat of a guess to try to just communicate what the town's vision is for lands that could potentially be annexed into the town in the future. I think certainly it's hard to, forecast any of that with any degree of certainty. So a lot of caveats to that, kind of different land uses that are depicted there. And I think some of that will be explained in kind of the text document of the report, which is being worked on. As far as the future land use map within town, I think as it's been discussed with the board as well as the planning commission, the intent really is to align with our current zoning pretty much to a T. So, yeah.
All right, great. Thank you. Our next station was focused on transit. So asking people about micro transit and kind of exploring the idea of micro transit, potential destinations that should be included in a micro transit service, asking people where they had trouble parking in Fraser, and then also what kind of bike improvements would make people feel more comfortable. And the feedback on these boards, most people definitely wanted the improved roadway crossings, but also very popular, prioritized on-street bike routes, as well as improved trail network. And then just some of the destinations that people gave feedback on to be included in part of a micro transit service area were lift stations, Fraser Granby trailheads, parking lots with frequent transit, train station, resort, and hospital. And I will hand it over to Art to kind of talk about the downtown vision. He was at those stations.
Yeah, thanks, Honore. Yep, so we had 2 larger boards, here for the downtown vision. As part of this, we presented an updated illustrative plan based on some prior feedback that we received through the town. We also included some diagrams that began to break down certain components of the plan, such as parking, active and passive mobility, public spaces, ground floor activation, etc. We also included some imagery for maybe character of some of these spaces, not necessarily exactly what it might be, but just give folks a little bit of an idea of what we're kind of thinking scale-wise in those areas. It's been a while since we last met in late January, I think it was, but some of the key components that we updated in the plan include an updated, improved link from Highway 40 to the river and vice versa. We expanded streetscape improvements to the west, going all the way down to the train station as part of a larger kind of district-based parking strategy. We updated Highway 40 to show the proposed CDOT plans. We modified our connection over to the existing Safeway lights over there, kind of on the upper right-hand corner of the plan. Thank you. And then we also showed some additional proposed development that is currently in process with the town. In terms of what we heard, I think there was a lot of positive feedback and folks seem excited about it. And it was really refreshing. I just feel like there was real friendly atmosphere with some of the folks that we were chatting with. So just had a lot of good conversations. Some of the main things that people liked, I think, was kind of the integration of community spaces into the design. I feel like folks, hard to go wrong there. They liked kind of the improved pedestrian road connections that were made in the plan, and also a lot of comments about the improved activation along the river as well. Some of the concerns that we heard, with the little bit of uncertainty of, roadway modifications on Highway 40, there was some concern over whether or not these plans are going to make it safer for pedestrians and users. Is this going to create a stronger barrier kind of connecting from one side of the road to the other? And is these new designs in terms of the Highway 40, is this going to create kind of a log jam of traffic and such through town? I would say, I think, there was some discussion about parking and some folks, that were a little bit concerned about the amount that's shown. In the plan, it's a little hard to kind of tell or visualize some of that, but really the strategy in the plan kind of looks at integrating truck under parking underneath buildings, possibility of having a kind of a shared parking structure, and then also utilizing some of the other space on the opposite side of 40 for street parking. So after kind of discussing that with folks, it seemed like that was a little bit more well received, and kind of the trade-off of would rather see some of those spaces as community public spaces, rather than large surface lots. And probably one of the other main thing that I heard was really just want downtown area to be local, and try to figure out a way to make that happen. So as we're kind of getting into recommendations associated with the larger master plan and the vision plan, that's going to be, I think, one thing that we're going to be trying to focus in on, and how to bring that to fruition. So that's mainly what I heard. Anna Ray, anything else on that?
No, yeah, that sounds about right.
Okay, then I think we probably, or nor anyone else. But if not, I think we kind of go on to continuing themes and talk about next steps.
Yeah, great, thank you. So yeah, these were kind of continuing themes that we felt like, we've heard through the previous engagement, and also really continued to hear just in discussions at the open house, which is that, the preservation of natural resources and open space is a really important to people, and it's a reason that people love living in Fraser. And so how to kind of like retain and keep that, growth and development really being seen as a concern and an opportunity. I think when Art is talking about downtown, people really see growth and development for the downtown area as a huge opportunity, and people are really excited about that. And I think on the concern side, just kind of the pace of development and wanting to make sure that Fraser stays funky, what we've heard people say before. Affordable housing continues to be, a desire for providing housing for residents and allowing people to stay and live in Fraser, and providing kind of a mix of different housing products. The safety and mobility, especially thinking about US 40, and, crossings just feeling unsafe or difficult, and unusable for pedestrians or people on bikes. And then kind of back to downtown, people are really excited about kind of this vision for downtown, having that interaction with the river, supporting, local businesses and the economy, and really as a gathering place for the local residents and the community. So yeah, those were kind of key themes we've heard throughout the process and continue to hear. And then I kind of recapped next steps earlier, but presenting to the town at the town board retreat, to the DDA board, and then having a second open house in July. And we're working right now on some of the draft recommendations, and so plan on presenting those to the public in July for our second open house. So yeah, any questions or comments? We're happy to take any of those, or yeah.
Well, I mean, connectivity, thinking about just roads and some of the lack thereof in town. Is there any focus on that, getting feedback from people, putting comments on maps or where they would like to see road connections?
I guess if I could maybe enter or start before
you.
our consultants. Yeah, I guess is the question maybe speaking towards some of the areas that town staff has identified, more so on the east side of Highway 40 where there's missing roadway connections that if established could alleviate some of our local vehicular traffic off of Highway 40.
Yes.
Yeah, I will say that wasn't necessarily a specific question as part of this open house. I do think that will be documented as part of the overall transportation element of the plan.
Okay.
But that is a good point that that's something that we could have done a better job of maybe soliciting some feedback. I think
There's more opportunities.
there's always pros and cons, yeah, and certainly, but there's always pros and cons to opening up that local connectivity with cut through traffic versus alleviating congestion off of Highway 40 kind of being the trade-offs there. So
Thank you.
Just for clarification, I see the term lift stations quite a bit, and I'm assuming that's a bus stop for the lift.
yes,
Because a
and
lift station is a feature on a sewer system.
yes.
Might want to change that vernacular a little bit.
That's a good point. I think for the I see staff from Cushing Terrell all nodding. I think the feedback around the microtransit was, popular existing lift bus stops being potential pickup areas, and yeah, for like some conceptual microtransit service. I think this is something that the Lyft Transit is already looking to implement more in the Winter Park area. So I think we are kind of asking what areas in Fraser might that service make sense to provide in the future, but good clarification. Yes. Go ahead, Lewis.
Yeah, I just had a question. Did it ever come up of putting pedestrian/bike bridges over 40 to provide better access, and not having to cross a road per se?
Yeah, I mean, certainly that's not something that I don't think the town would certainly not rule out, grade separated crossings, whether it's an overpass or an underpass. Certainly anything like that along Highway 40 is challenging, just working with CDOT in partnership to implement something like that. But certainly that's, separation is one of the safest types of crossings, but certainly more costly to implement and again, maybe more complex from the CDOT partnership side, but certainly not something that we're, just ruling out at this early stage, I would say.
Yeah, just to chime in there real quick too, at least in downtown Vision area, I know getting kind of across 40, as I mentioned, was one kind of repetitive comment there. And there was also not just, I guess, getting across 40, but it was also maybe the barrier currently that the railroad is, and maybe having more crossings there. Maybe that's under or over as well.
Okay, thank you.
Any other questions, board? Go ahead. You go ahead and approach the mic.
Hi, Clark Lipscomb for the record. For the workshop that happened, I don't know, 3 months after planning commission review of the plan and a lot of comments that were taken on the planning commission, and then a subsequent town board meeting. And it did not appear to me that the maps at the workshop had been updated to reflect comments from the planning commission and the town board before they went to the workshop for the community. And I'm just curious why that was the case and why the maps had not been updated. I'm talking about the overall. I'm not really focused on your downtown development area, because I don't think that's part of the bigger picture 3 mile plan, but moreover, there were comments made, particularly the overall bigger picture maps, that I think I would have thought they would have been updated from following the planning commission and the Fraser Town Board meeting prior to going to the community workshop, which was several months later. So I'm just curious why that wasn't done and what kind of ongoing work's being done kind of on this to actually address comments that you get from the public. Thank you.
I'm happy to speak to that first, and Cushing Terrell staff can chime in if you don't mind allowing me to be a co-host. I'm going to pull up what was presented to the Planning Commission and Board back in January, February. I think one of the biggest changes that was made to this map, because changes were made, I want to be very clear about that, was the West Mountain area of Grand Park. These future land uses were based on some GIS shapes that I believe were created by Jody Flory, who is a kind of combination Grand County, Town of Fraser staff who works on our GIS assets and things like that. These boundaries really do not reflect very well the 2005 PDD plan for Grand Park. So this was, and if I can shift over to the future land use map that was presented at the open house. Sorry. Those areas were changed to better reflect the PDD. One oversight on this map is specifically the West Mountain Filing 1 area, kind of right where the cursor is. This area has been approved by the board, but the kind of shape of that proposed development is different slightly than the PDD. So certainly we want the future land use map to reflect that. I think there are other areas in Grand Park that were made more accurate and reflect either what's already been built or what is proposed and has received planning approval from the town. I will note that we did receive feedback from Grand Park Cornerstone staff regarding the Byers Peak Ranch area, specifically the area within Fraser Valley Parkway, County Road 721. It's currently shown on our future land use maps with this purple color, which denotes a future collaboration area going back to what was presented in January. That was not changed at all. Staff has reached out to Lisa Steckler from Grand Park requesting the most current plans for Byers Peak Ranch. I think the ones that the town has on file are a few years out of date. And again, the fact that this is in Grand County and not the town, town planning staff hasn't been intimately involved with that development as it's occurred and gone through the planning approval process at the county. But I just want to make all assurances that this area will be updated to reflect whatever the current plans are for Byers Peak Ranch. I understand it's a mix of residential, probably on the medium to high end, high density. So certainly we want to reflect what those plans are, and we'll certainly have that updated in the final version of this map. Any other comments from Cushing Terrell about some of the changes that were made? Those were some of the ones I can think of at a high level. I know, I guess just looking at this, some of the area around the Jones Ranch property was changed. It was previously all shown as mixed use. We're showing more open space areas kind of to the north and west of the wastewater treatment plant. Certainly I think we could show more open space areas along the Fraser River. We're kind of painting a lot of the areas in unincorporated Grand County with kind of a broad brush stroke here. So again, I think a lot of these depictions should certainly be taken with a grain of salt. So.
Yeah, no, I think you pretty much covered it, Garrett, the summary of changes.
Great. Thanks, Nora.
One more thing. Thank you, Garrett. Clark Lipscomb again. I wasn't focused on Grand Park or Byers Peak Ranch projects, to be clear. I do, however, think when you're doing a master plan like this, you reference the underlying zoning. And the prior plans did that way better because within all zonings, I don't care if it's the B zone in town, like the Meyer lots, for instance, there's open space required within those. PDDs have great amount of flexibility, and it's misleading to the public to put detailed plans that aren't real plans and haven't been approved, platted, or otherwise in a PDD that has mass flexibility. Prior plans, for instance, for Rendezvous and Grand Park, were colored orange, I think, representing the PDD zoning. And that's similar, I think, to what you have on the Meyer lot, for instance, where there's business zoning. With respect to Byers Peak Ranch, happy to share plans. I think you have current ones, but again, I don't think a plan like this is where detailed plans belongs. And then the big one that I was focused on, and I think it was Peggy Smith at the town board meeting, reiterating, I think, what was stated at the Planning Commission that she wasn't at, was the area north of Fraser that is still called out as mixed use. I think she was pretty adamant about from the highway to the river being open space corridor. And I specifically spoke to that in Planning Commission, given my experiences with the Grand Park Meadow. And that seems to continue to be neglected or ignored. And I haven't heard anybody say we'd like that area to be mixed use. I think at one point it was an industrial type use. So I wonder kind of who's guiding these and who's taking comments from your board or your planning commission or even the public and kind of picking and choosing what goes where. Who's driving those things? Because it seems that was a pretty big comment by Peggy, and she made a big deal about it and focused on kind of mimicking the Stadelman Ranch conservation easement across the street all the way into town. So town would effectively stop at County Road 8 and really the St. Louis Landing project. So that seems to be neglected and not addressed in the plans here. Thank you.
Any other points on that? Okay.
All right,
Okay. Well,
it's coming along.
I was just gonna say, this is coming along. It's obviously open for more feedback. So anyone in the public that's watching or looking this up later, feel free to let us know, whether it's board staff or Cushing Terrell, what you want to see. This is the town's comprehensive plan, and you're all part of the town, so we want your input. Sure.
I was just gonna say, I like all the stuff in the plan. There's some really good ideas in there.
Yeah.
Sorry. Oh, sorry, Parnell Quinn. My apologies, I forget. I like the idea. There's a lot of good stuff in plans, but we got to get you guys working with the county because the county's killed a couple of plans that would have fit right into this. And instead of having micro cottages, we're now going to have more apartments being built. Something to think about.
Okay. All right. I'm not seeing any more comments, so thanks, guys.
Yep, thank you.
Thank you.
Thanks, everyone.
Thank you for
and,
your time.
Yeah, thank you,
Thank
board.
you.
All right, next up, resolution 2025-0505, authorizing mayor to sign an agreement for economic incentives, WDK Hotel Fraser, Delaware, LLC. Sarah is presenting.
Hello, Mayor Cirkbenick, Board of Trustees, Sarah Catanzarite, Assistant Town Manager. I'm just going to go through my staff briefing fairly quickly, and then Grant Duport, and John Walsh are here to present on their proposed project and their request for economic incentives. So the matter before the board today is consideration of an economic incentive request that was submitted by Walsh Duport for the development of a new 103-key Spring Hill Suites by Marriott Hotel in Fraser. The board may determine whether and to what extent to provide incentives to support the viability of this project consistent with the town's economic development incentive program. To provide a bit of background, last fall, the Fraser Board of Trustees did adopt a revised Fraser Economic Development Incentive Program, inviting new commercial developments and businesses that align with Fraser's economic development goals to present incentives. The program is meant to prioritize projects that diversify the economic base, provide a unique amenity or fill a gap in the economy, provide regional draws, generate substantial sales and property tax revenues, contribute to Fraser's unique identity and vitality, and that require the incentive to help support the project's financial viability. In alignment with this policy, Walsh Duport have submitted a formal request for incentives to support the development of the hotel. It would be owned and operated by WDK Fraser Hotel, LLC. The hotel would be located at the corner of Rendezvous Road and US 40 and represents a major new lodging option for tourism and regional events. Grand County recently engaged in a tourism study, Grand County 365. The link to that study and what came out of it is provided in your packet in the staff briefing, but it does note that lodging capacity is a barrier to economic growth and year-round tourism sustainability. Currently, the majority of visitors to the area do stay in short-term rentals, and while this is a great option for many tourists, it doesn't fill all tourism needs or all visitor needs. Short-term rentals also do contribute to the added stress of the lack of affordability for housing for our workforce. So providing alternative lodging options does provide that benefit as well. So their incentive requests, they've asked for a phased rebate of the town of Fraser 4% sales tax on all lodging and sales. Year 1 would be a 0% rebate. Years 2 through 6 would be a 75% rebate of that 4% sales tax. Years 7 through 11, 50%, and years 12 through 16, 25%. In addition, they've asked for a 50% rebate on their construction and use taxes for building of the hotel and a 50% rebate of building permit fees, payment of water and wastewater plant investment fees over 2 years, and deferral of water and wastewater quarterly service fees until issuance of certificate of occupancy. In evaluating this project, again, we ask you to think about what the program was designed for and what it's meant to prioritize and help to support. This project does seem to align with diversifying the local economic base, serving as that regional tourism draw, generating meaningful municipal revenues, and really, again, filling a critical lodging gap in Grand County. Some different considerations: it would be Fraser's first national hotel brand of this caliber and the first hotel in over 20 years. They have forecasted selling over 20,000 room nights annually, helping to drive visitor spending and support for local businesses. They will be providing a trail on the back of their property as part of the Mary Ann's Loop Trail, bus stop upgrades, and a publicly accessible bar. And then incentive structure that they have put forth would be shared generation of hotel sales tax. Staff recommends that the Board of Trustees consider the goals and criteria of the Economic Incentive Program. It is at your discretion whether or not to award incentives and to what degree. To consider how this project fits within economic development for Fraser and Grand County, the benefits this project may bring, as well as other considerations posed to determine if and what level of economic incentives are warranted to support the financial viability of this project and the projected benefits for the community. The board wishes to approve the incentive package requested. You may make a motion to approve Resolution 2025-0505, which authorized the mayor to sign an agreement for economic incentives. Included in your packet is the full application they submitted, their cover letter. There's an overview of the hotel, and then the actual agreement for economic incentives is included. The resolution provided would cap total economic incentives at no more than 2.5 million in total over the course of the incentive package. So I'll let them present, and then I'm happy to help answer any questions you might have.
Thank you very much. Good evening, Mayor and trustees. My name is Grant Dupart, one of the partners with Walsh Dupart, and I also have John here with me tonight. I'm going to share my screen if Zoom will allow me and run you through a quick presentation on what we're intending to build here and why we're asking for a little bit of help on our incentives package. Okay, so before I get into our quick package and an overview on the project, just to tell you a little bit about John and I. We started our company 5 years ago. We actually met in college. We were college roommates. I grew up working in hotels. My first job was in hotel operations. I love hospitality. It's all I've done my entire life. John ended up in the construction side of the business, and fortuitously after graduation ended up building hotels as a contractor. After working independently for a number of years, always in the hotel space, John and I decided to take the entrepreneurial leap, start our own company in 2021. We build and we buy hotels, but primarily we're focused on the Rocky Mountain region. The majority of our hotels are located here in Colorado. Our office is headquartered here in Colorado, and we very selectively do development in Colorado Rocky resort towns. And we've been wanting to do a hotel in Fraser for a very long time. It has taken us a long time to find the right project to work on here, and we are very excited by the one that we're bringing to the table today. The project we've been working on for a little over a year and a half. As a company, our philosophy is to build really high quality product that's accessible by a wide range of both demand types and economic levels. So, we're talking about building a Spring Hill Suites product, which is a Marriott hotel. Just to be clear, Marriott doesn't own the hotel. We pay a franchise fee to be a part of Marriott, and John and I would be the sponsors of the project. The reason why we like these hotels is because it really works during all types of all seasons year round. We can target government demand, corporate demand when things are slow in peak resort season. They're great hotels for leisure demand, and our rooms are relatively large. I'll show you a layout of what they look like. Certainly bigger than what you're used to seeing. Our strategy is to over improve our product. While there are a lot of off-the-shelf plans that you can get from a company like Marriott for a Spring Hill Suites product, that's not what we like to build. We're long-term holders. We don't seek an exit, a quick sale on the hotels that we build. We spend extra money where we can to over-design the exterior and the interior, and we like to embed into the markets that we work in. Right now, we have 5 hotels in our portfolio. 2 are in Durango, Colorado. 1 is in Denver, and then we're building a hotel in Steamboat Springs. It's under construction right now and should open next year.
We don't raise money from private equity. We go to individuals and we effectively pass the hat to try and raise our capital for our projects. That's one of the reasons why we're able to hold longer term and to be a little more unique in the structure that we provide. We've spent a lot of time. We've spent also a lot of our money to get this project to the point where it is today. We really would love to try and build this project this year. And so the incentive package would help us to push us over the edge to get this done and really start construction, hopefully towards the end of this spring, which is necessary in order for us to make the building season work for this project. Otherwise, it ends up getting pushed to the next season. That's a little bit about us and our strategy. Wanted to show you a little bit about the hotel brands and what exists out there and what we're trying to not do. So on the screen here is a prototype. When you go to Marriott, you can say, I want to build a Spring Hill Suites, and they will actually just give you a book of plans, right? They'll say, if you want to just build our normal hotel, here it is, go find some land, and this is the color, and here's the exterior. This is what a lobby might look like for a Spring Hill Suites today. This is from a Spring Hill Suites down in Denver. Interesting, but not necessarily a local feel. Here's another rendering of that same hotel. And then here's what we're doing here in Fraser. We've worked really hard to design a hotel that brings a mountain lodge aesthetic on the exterior, and on the interior lends itself not only to that same lodge environment, but also focusing on some renderings of what this lobby and public space is supposed to look like. Here's our reception desk area, front desk as soon as you walk in. Lobby bar, which will be open to the public. The great thing about hotels is that they're always open to the public. We have some fire pits outside next to the pool, and that will look up towards the Continental Divide, which will be a really nice experience. Fireside lobby seating in the lobby, breakfast area. In our program, we serve free breakfast, so you can buy a reasonable room, reasonably priced room. We have 103 keys. We have an outdoor walk in here, like I said, custom bar in the lounge and breakfast area. We don't have a for dinner, right? We are not restaurateurs by trade, and we don't really want to be restaurateurs. We'd rather deliver a really exceptional rooms experience. If someone wants to have a cocktail or a beer, of course, we want to be able to take care of them. But we also want them going out and exploring the towns that we're building in. This is just an upper floor plan of a simple layout of what our guest rooms will look like. And then a sample of the guest rooms that we're building. So a double queen room is actually really quite large, around 430 square feet. Got a sleeping area, a little dry bar, couch that's a pull out in every single suite, large bathroom. And then in the king rooms, it's just one smaller bed, but still 350 square feet. So very comfortable space for multiple people to stay in if they'd like to. It also works very well for couples, business travelers, government travelers, and the likes. One of the reasons why we've been attracted to trying to find an opportunity to build a hotel here is because of the age and of the current product that's really in this whole valley. We think there's an incredible opportunity here to build a new product, and there hasn't been a Hilton or Marriott hotel built in this valley before. That is rather rare for really great markets like Fraser. And so we think that there is an opportunity to do well here. The challenge is that there's really no proof that the occupancy and ADR can be achieved with a new hotel. And of course, that risk is what makes it hard to find investors to then go and develop projects. And things like an incentive package help us to attract people to the project so that we can push it forward. There hasn't been a hotel here built in 20 years. And we're really excited to deliver some new product for the market. What we thought would be interesting is to help compare revenue generating potential here to some of the other markets that we've looked at. So going back to 2019, we looked at what's called RevPAR, which is basically a combination of an average daily rate and occupancy. And we looked at that in a few other markets in the Colorado Rockies and correlated those averages over the last 5 years. What's interesting, you'll see, there's been really a discount in this valley
to the revenue performance of hotels compared to those other markets. And this is the piece that makes it really hard to push a project over the line. Of course, very interestingly, we've seen some positive momentum in 2024, which we are personally thrilled about, and we hope that that continues. What we look at here is this discount in terms of RevPAR to what the comparable markets are, because frankly, construction costs aren't drastically different to go from one market to another to build the type of product that we build. If we were doing something that had a ton of concrete and a parking garage, maybe it would be different if we were in Avon than Fraser. But for a building that's wood framed and relatively compact, the costs are not significantly different. And so our revenue generating capability on paper is impacted by potentially the lower return. So just using a rough comparable cost for a project of this size, and taking the 2024 numbers, which are actually the highest, of course, that we've seen in the last 5 years materially, there's still a bit of a gap to get to the same return on cost. As an example, for what we are seeing in a similar revenue generating market like a steamboat. And so that's the piece that we're trying to bridge so that we can push this project over the line. What we are asking for is a phased rebate. We really worked hard to try and come up with something that put dollars in the town's pocket quickly, and still made it so that we would be able to get this project done. That is why we aren't seeking rebates in that first year. We're splitting taxes day one on the rebates for excise and use, and same for the building and permit fees. This will enable us to attract some more investors and make sure that we can get this project done. That's all I've got. I'm happy to take some questions, or I can step down and let you ask questions of Sarah or whatever you prefer.
I know you have projections. What do you anticipate your occupancy rate to be annually?
Great question. So in hotels, we have a ramp up period. So
that was my next question.
Yep. So
Year one.
So ideally, our ramp up period in our perfect world is pretty short, right? It could take maybe 2 years, but it can take as long as 4 years as well to get to a stabilized period. That's where the brand can come in to help. What we're trying to do is bring in a brand to help fill our hotel up. As an example, rough numbers, Marriott contributed roughly 70% of the room nights booked in all Marriott hotels last year directly through a Marriott platform. That's great, right? Like that really helps us to fill up the hotel quickly, because consumers who are saying, I'd like to visit Colorado and I don't know where to go, there are still a lot of road warriors out there who are loyal, right? They're loyal to their airline or they're loyal to their hotel brand. And they're going to say, I'm going to look on my Marriott app. Where am I going? Where can I use points? And that's going to attract them to this market. So Marriott helps accelerate that ramp. And I think it'll be about 3 years. We hope to stabilize in the high 70 to low 80% occupancy range. In the early years, it'll probably be high 60s, low 70s.
I really like this plan. I like the fact that you are doing this kind of phased approach to it. I think you've looked at what the town has done in the past and kind of improved upon it. So I think this is a pretty good setup, and one that probably sets some precedent for future incentive requests moving forward. Thank you.
Yeah, and it fits all of our goals and criteria for eligibility.
Mm-hmm. Yeah.
And I like the 2.5 million cap.
Mm-hmm.
Incentives don't go on and on. You're really successful and whatever. So.
Yeah, we hope that you're super successful and you hit that cap really fast.
Thank you. Us too.
Yeah, and obviously the added benefit of having more rooms available might make people who have Airbnbs rent long-term to locals instead of having short-term rentals. So
Lewis has his hand up.
Lewis, go ahead.
Yeah, hey, I was just curious. I love the project, and thanks for the presentation. The 20,000 annual, I guess, room rentals per year. Is that what percent occupancy is that?
I could do some quick math for you. 1 second, sorry. That's our first year. It was our estimate. We kind of set, we think it's going to be more than 20, but of course we want to be a little conservative when we're messaging our estimate for you all in terms of how much demand we think that we're going to generate for the hotel.
I don't want to put you on the spot, but
No, that's
it's
okay.
just
20 would be about 54% occupancy. So we said over 20,000. I think we end up at the 60% range, which is in the first year about 22,000 room nights booked. And I guess I should say that's room nights. So some people of course stay more than one night. It's just a matter of how many people are in those rooms occupying them. It's really important.
okay. Yeah, this is a little different than what I'm normally used to seeing the first year at 0 and then you go to 75, 50 and 25. I was just wondering what the rationale for that was,
A lot
to
of
have
it
no rebate for the first year.
Sure. A lot of it was based on our just study of incentive opportunities and listening to the board and trying to find an opportunity to put cash in the town's pocket up front. Of course, I mean, occupancy will not be as strong in that first year as it will be in later years, but I think it is good. And good for both sides. And what we did was take a present value of both of the incentive packages on your side and our side and effectively try and equal them out. And so that helped get to that number. The cap ended up, I guess, tilting it out of our favor, but we understand that.
So when do you expect to reach the cap of 2.5 million, I guess?
Yep, great question. I think it will be in year 13 or 14. When we first discussed this structure, it was going to be around 2.6 million over the entire 15-year period. So if our projections are right, we'll hit it in year 13 or 14. But I also am really hopeful that the hotel opens and we see the demand that we all expect that hotel to see and that it shortens.
Okay. You're also going to have like ski lockers and stuff for our ski tourists?
Yeah, we have ski lockers behind the front desk. Definitely.
Okay. Great. Thank you.
Thank you.
It's a bit of a random tangent, but how does Marriott help in promoting this location?
Great question. So we pay into, as part of our total revenue, we pay royalty, which is effectively for the name. And we are frankly less focused on the name because we really want people to feel like they're staying in more of a custom hotel that's more of a Fraser hotel, but there's brand power, of course, behind it. And then we pay into a fee called the program services contribution, which is a large percentage of our revenue. It's roughly 3%. And that fee goes into effectively a marketing pool that Marriott then uses to advertise for the brand, both nationally and at a local level. On top of that, we also set aside money in a sales and marketing effort to advertise for our own hotel. And we do that, some of that in conjunction with Marriott. We will say, hey, we really want your help to create a digital campaign to say, let Front Range people know that we exist. If you take the train, you could stay at our hotel and maybe not go back that same day and get another day on the mountain, right? And so Marriott can help us with some of that. And then we'll also just do our own digital marketing on social media and geofencing and the likes.
Do you know, or do you have influence? I'm thinking a lot of places market as Winter Park, not as Fraser.
Or a little
Do
bit
you
of
have a
both.
plan, or
On how we market the hotel?
do you plan to market as Fraser, or?
Fraser
as
will be
Winter
in the
Park?
name for the hotel.
Okay.
So when you see it on the website, it will have it. I think that there will probably be naming for the ski resort as well, because
Okay.
one of the most popular search items, of course, is going to be skiing Winter Park, right?
Yeah.
But we also want to have the Fraser naming as well. And, I often look at you know, just where rates are in the market. And one of the things I've looked for, and I think it's a challenge, is if you go to the IHG website for the Holiday Inn Express and you start typing in Fraser, it doesn't auto-populate. That's a problem, right? I would honestly, if I'm the owner of that hotel, I think it's a problem because you want people to know your hotel exists here, but that SEO is off, right? And so we need to make sure that our hotel is coming up when you go to Marriott.com and you start typing in Fraser, Colorado, right? Because right now, at least with another parent company, it's not always being targeted. And maybe that's my phone, right? But I think it's an issue,
No,
right?
it's- Google says my house is impartial.
There you go. Yeah.
Block away.
You know, and actually that's an interesting topic, because that's something that we can assist with, because if our businesses are having this problem, we need to be able to take care of this, or the chamber or somebody.
Yeah, and I think the chamber can help with that. Business owners should be taking
It's
it
an
on as
individual
well. It's like,
responsibility?
yeah, it's
Okay.
their,
Okay.
I mean, objectively, I should want people to be able to find their hotel pretty easily. But I think sometimes it gets lost in the mix.
That's good to know.
Lewis, you had your hand up?
Yeah, one more question about, since you mentioned it, are you planning on having shuttle service to the train station or to the resort, or, you know, with the new rail service coming into Winter Park Fraser, it seems like they're going to need some way to get to the hotel other than riding the lift.
Good question. We won't start with shuttle service. We have some hotels that do have it. In Durango, we did have shuttle service, and we're a similar walking distance to the downtown areas there. And we ended up turning it off because we weren't getting a lot of use from the shuttle. We kept the vans, and occasionally we'll use them when we need to. Here, we're over improving the lift stop as part of the construction of the hotel. And we think that our guests will use that often. What we've found is that, so for the train, I think that's one piece of demand that's a little bit tougher to quantify. Whether or not having a shuttle or not will be helpful. But for a family, they really tend to not use the shuttle because we have just operationally, we have 12 seats, and maybe you have 7 people that get on and the family wants to go skiing and you only have 3 left or whatever it is, and someone gets left out and then they're upset. And so it frankly can cause a little bit more challenge for our guest satisfaction than it does benefit. We don't rule it out. If we come into the market and we open and our guests are saying we really need a shuttle, or if it's going to benefit our hotel, we can very easily add that. That's an easier add than it is to.
Okay, just something to think about down the road.
We are definitely thinking about it, and it's something we'll always evaluate.
Okay, any more questions? Okay, there is a resolution that we can make if we want.
I'll make a motion. Again,
Oh,
I'm on a roll to approve resolution 2025-0505, authorizing the mayor to sign an agreement for economic incentives with WDK Hotel Fraser LLC.
Second.
any further discussion? All in favor?
Aye.
All right.
Any opposed? Okay, motion carries. Thank you.
And we'll do it, fellas.
If you could let me know a little earlier. Yeah, right? Okay. All right, moving on. Affordable Housing Fee Incentive Resolution 2025-0504 and Ordinance 523.
Good evening once again. Sarah Catanzarite, Assistant Town Manager. You have in front of you today Resolution 2025-0504, adopting the Town of Fraser Affordable Housing Fee Incentive Program, as well as Ordinance number 523, amending Chapter 2, Article 2 of the Fraser Municipal Code regarding Board of Trustees. I'm going to go ahead and go through this fairly quickly. It is more or less the exact same presentation with just a couple minor updates that was given at the last board meeting when we discussed this program. So this is just being presented again with the formal resolution to adopt the program, as well as the ordinance that would be required to adopt the appropriate language for our municipal code to allow the program to exist and for the Board of Trustees to have the power to offer the incentives that are outlined in the program. So again, I'll go through it fairly quickly, but please feel free to stop me and ask questions as we go. So affordable housing is housing that costs no more than 30% of a household's gross monthly income, rent or mortgage plus utilities. The Colorado Housing Finance Authority, CHFA, sets yearly maximum income and rent limits based on area median income. Just as kind of a baseline, DOLA's different grant programs that we have taken advantage of, Strong Communities and More Housing Now defines affordable housing as up to 140% AMI for rentals and up to 160% AMI for home ownership in rural resort communities. So this would encompass both lower as well as that kind of missing middle income households. They did recently update, I'm sorry, this should say CHFA 2025 Grand County income limit and max rent. So those are updated generally the start of every April. As discussed last week, the Fraser Valley Housing Needs Assessment does show that a number of units are needed and really kind of spans from lower income households less than 60% AMI up to 180% and beyond. So really just kind of a gap in what is available in terms of market housing in our community. The needs assessment really set out the intention that community housing meet the full range of rental and ownership housing types and prices needed to support household changes over time and ensure the valley remains a complete and vibrant community. I think this builds very much on the 2017 Town of Fraser housing policy that stated that it believes that providing a variety of housing within the community for employees and families is an important component of community character, sense of community, and sustainability. Accordingly, the Fraser Town Board is seeking proposals for collaborative partnerships to address community housing. So this program is really just kind of setting a base parameter for what some of that collaboration can look like. So we divided in the projects into two tiers. Tier 2 projects, at least 50% of housing units in the project must be deed restricted to local workforce or primary residency requirements. Again, we did local workforce as well as primary residency, as LIHTC focuses on primary residency versus a workforce requirement that we have used in other deed restriction programs here in Fraser. So the idea is that of that 50% of housing units, the units must average 100% AMI or below per the CHFA rent limits, with no units in this mix priced at higher than 140% AMI. The other 50% of units in a development could be sold at market rate, so those are not impacted by the numbers here. What has changed in this policy from our last discussion per request of the board is that the for sale deed restricted units is previously stated that they had to average no more than 140% AMI, with no individual unit priced above 160% AMI at the time of initial sale. We added in upon resale, the price may increase by the annual consumer price index, but no more than 5% in any 1 year, and that the town of Fraser shall retain a right of first refusal on subsequent sales. Deed restrictions for these projects must last for a minimum time period of no less than 30 years from certificate of occupancy or the minimum time period required by LIHTC or another deed restricted funding source. So this incentive package was 100% of the site plan fee and the subdivision fee, as well as the building permit plan review fee and building permit application fee would be waived. Building material use tax, 50% reimbursement, and 50% for the pre-construction quarterly service fees. Water plant investment fees can be deferred and paid quarterly over 2 years, and wastewater plant investment fees can also be paid quarterly over 2 years from time of CO. Tier 1 projects, again, the only difference between Tier 2 is that the deed restrictions must remain in place for perpetuity. So we're trying to balance supporting any sort of affordable housing that can come online, but really trying to promote and encourage that those be deed restricted in perpetuity. So we don't need to replace that housing stock that comes online 30, 40, 50 years from now. Again, it's highlighted here, the differences. So the building material use tax, the reimbursement goes up to 100%, and pre-construction quarterly service fees are at 100%. We provided some sample scenarios of what those costs can look like. So those are outlined here. And then tier 1 projects may also request subsidy for the water and wastewater plant investment fees in place of deferral in full or in part. We want to make sure we continue to get those investment fees for our water and wastewater treatment plants and systems. But this would be the town providing that subsidy to cover those fees. Property tax exemptions or rebates may be considered for projects meeting additional standards and statutory requirements. And additional subsidies may be considered for projects that are deemed highly valuable and meeting Fraser's housing goals and or is needed to help make projects financially viable. So we're trying to present kind of a baseline of what all projects that meet this criteria would be eligible for, but recognizing that those dollar amounts may not be enough to really move the needle, and providing some room for the town to be able to negotiate and try to get projects that better meet our goals. It allows for some flexibility and additional subsidies that could be offered. Additional subsidies may also be considered for projects that deed restrict more than 50% of units and or meet a lower than 100% AMI average across deed restricted units. And that all of these will be periodically reviewed and modified with board approval to remain in line with meeting Fraser's housing needs, and particularly looking at subsequent housing needs assessment updates, changing construction and project cost in the housing markets. So again, happy to answer any questions, but if you did want to adopt this program as is, resolution number 2025-0504, adopting the Town of Fraser Affordable Housing Fee Incentive Program, is in your packet. And then ordinance number 523, amending Chapter 2, Article 2 of the Fraser Municipal Code regarding the Board of Trustees, is also included. That adds what you see here in letter E. It's basically a general catch-all, just providing the Board of Trustees the authority to offer these incentives for affordable housing.
I have one question on this. And it's towards the end, that third line. Where it says, and water and wastewater plant fees, as well as possible property tax exemption. I'm wondering if just to that part that says and water and wastewater plant investment fees, include that in the as well as possible. You know, versus just stating that, yes, the way it sounds there is we would always just make that happen, but it's more as possible. I don't think that we want to tie ourselves to that. So does that make sense? It would be a pretty simple cut and paste, I think.
Yep, I think that would be fine. I will defer to Kent if he sees any issues there. I would say all of this is just saying that you are allowed to negotiate an award. So none of this, I don't feel that any of this ties you to needing to do that. Again, it's kept very general. I think the property tax exemptions was written a little bit more just because there's more kind of statutory requirements at the state level in terms of what we're allowed to offer property tax exemptions for, as I understand it.
Okay.
Yeah, I would agree with that. This language here, Katie, is essentially to give as many options as possible to the Board of Trustees for negotiation. It's not to pigeonhole the trustees into one specific pathway or to require them to do any or all of these. So
Okay.
The way it's written, it has total flexibility, in my opinion.
Okay. All right. I'll go with you then. We can leave it as is.
Yeah, I do have And I appreciate you adding in that right of first refusal and the deed restriction portions. My concern is that we are going to create a situation of speculation and or early exit 30 years from now. That 28 years from now, somebody goes and buys it thinking that it's going to be at regular rate in 2 years. And so I think the right of first refusal is probably the first step in that. I think the town needs to be able to purchase it at that deed restricted price and continuing to go up, even if the first sale after that 30 years is at 35 years or something like that. Because otherwise we're paying retail price and we've already invested in the deed restricted product. So I think on that first right of refusal, we also need to be able to have a price that is on that deed restricted so that we can retain it at its commercial rate that we intended it to be, not so that somebody 30 years from now can all of a sudden get $300,000 or $500,000 increase in value because they owned it and the town didn't have the money to buy. I think we need to make every effort to keep this in our even after in our portfolio, even after the 30 years. And I think giving us the right of first refusal and continuing that 5% or CPI would set the town up for success in that light. Otherwise, who knows what the values are 30 years from now? They could go up $1 million overnight. And some family might say, time to leave rather than staying in our community, So I think there's some safeguards we can do to protect ourselves and keep this as a longer term investment for ourselves. But I think it's just adding to what we already have.
Just quickly, are you referring to just the tier 2?
Yes, the tier 2
Okay.
specifically, yes. Sorry.
Okay. Yeah, I understand that point of view. I think it's something that was discussed last time too, and based on Sarah's research on this as well. I mean, it definitely doesn't make a whole lot of economic sense as far as the programs that we're offering. This is really trying to encourage those who would want to do this type of project just because they want to get back to the community or they have some land that they like to see some type of restrictions on for housing to go vertical. Is kind of the incentive here. Sarah, I'll let you kind of add to that. You've had some more in-depth conversations with some of the communities with this.
Yeah, I mean, that's in part why we wrote in the additional subsidy piece. I mean, if a project is looking to do this, they may very well need additional subsidy to pencil it out for those affordable units. There are some communities that in order to get any of this, it has to be deed restricted in perpetuity. So that is another route. And again, the dollar amounts I think are small enough up front that if we get affordable housing for 30 years, that dollars well spent.
In 30 years, we're going to need that affordable housing 100 times more than we need it.
I agree. Yeah.
And so I'm just trying to retain the right to acquire this at an affordable price when we've already invested.
So if I understand you correctly, for a for sale unit,
after the 30 years,
we still want to be able to
have the
purchase it.
First refusal, but we should be able to purchase it at that deed restricted elevation, not at, because in 30 years, it's going to quadruple in price or something because we've held it down for so long.
Yeah.
And so whoever owns it in that 30 years that's a retirement. And it's a deed restricted property up until then. So I think we need to we still have the right of first refusal, but we need to be able to buy it at that lower price.
So in my head, and correct me if I'm not thinking about this right, or if you have different thoughts, Ken, in my head, that basically makes it a tier 1 project. Like if we can continue to buy it at the deed restricted price.
We only have that. If we pass on purchasing, it's commercial, I guess.
Sarah,
but that gives us the opportunity to retain affordable housing in our community for just further investment when we've already invested up front.
Yeah, can you go to that there? Yeah, the price structure that you showed there, the examples.
Yep. So like a tier a tier 2 single family home, if they're not getting any additional subsidy, based on this model and the numbers used to calculate these fees, it'd be $6,752.
That's their savings. That's what we, per unit, which isn't much. Or incentive.
So I think, Trustee Kugel, what you're saying is you're looking at doing away with the tier 2.
No, no, I think that's fine. I just think that if we were to exercise our right of first refusal, we want to keep it at affordable housing prices. If we purchase it, why are we not, when we created the deed restriction, we paid for the deed restriction, why are we not getting deed restriction price? If it's after 30 years.
I mean, I think
Or maybe not 30.
from the developer's
Yeah, after 30
perspective,
years, it goes to market value, and that could be 10% more, it could be 500%, it could be 1,000, you know?
Well, PD's 30 years went pretty fast.
Yes, it did, very fast. Which was tough.
I think from the
Tough for the big
developer's
head.
perspective, tier 2, 51K for 20 units, like, yeah, that helps get you across the finish line, but like,
This affects the
It's not-
developer at all. I
Right.
think it's who's owned it in 30 years that.
well,
Are they
assuming that the
speculating
owner and the
or-
developer are the same,
Yeah.
but I'm just,
This ordinance language gives a lot of flexibility to the town to work out the details of what you're referring to, Katie, down the line. Ultimately, there's going to have to be a deed restriction that's negotiated between the property owner and the town. And the town's going to be in the driver's seat on that. And so if we want to put what Adam is suggesting in there at that time, that this ordinance language will give the latitude and flexibility to do that.
There's other options. Okay.
That's
I
really
just
when
see-
it's
I
gonna
have a
come
hard
into
time
play.
thinking we're investing in
Yeah.
something so somebody else can profit on it later. We should have the opportunity to retain that portfolio.
Yeah, I can see where if it's included in the language, somehow it puts that investor on notice that that could happen.
It wouldn't hurt.
So I think that to play fair, they should know that that could be an option.
And that person that buys
So-
it 28 years from now would need to read that.
Yeah.
So, and know that
Yeah.
speculation.
what happens,
That's just like-
what happens when the deed restriction is over? So they hit the 30-year mark.
I
They can
think
now
we
go
still have a
market
right of
rate.
first refusal and we still, that's why it's in here that we get it.
Still
We can
5%
continue,
every
we
year?
can calculate out that CPI. It's 40 years down the road, you know, we can calculate that 10 years. And then we have a purchase price.
What about at like year 30 that the town has the option to purchase a permanent deed restriction based on the 5% cap every year of where the valuation is for the property? And maybe the town has the ability to purchase it because the first right of refusal is somebody provides an offer on the property like after the 30-year mark. It's going to be much, if it goes market rate, it's not going to be a first right of refusal. It's going to be called something else.
You could do a first right of refusal before it goes on the market. If you have a 20-day period before they.
Yeah, that's kind of
put it
what
on
I.
the
maybe like
market.
It's
within 12 months of
we
the
have an
operation,
opportunity to buy it at
Yeah.
our investment
the
rate.
town has the option to purchase at the set price.
If it's for sale, then they want to sell.
I think that's what we're talking about, is the for sale.
Yeah,
Yeah.
I just worry about losing housing in the future
Mhm.
and we're gonna be 10 times the size and have 10 times the needs.
Yeah. That's why we're encouraging tier 1.
Yeah.
And I do think it's a balance between trying to encourage tier 1 and having that permanent stock and wanting to encourage people to give us any level of affordable housing. Something to consider as well is our current Fraser deed restriction program does not have any sort of appreciation cap, income cap. And so that currently is a much better deal for somebody, I think, honestly, than getting some of these fees waived up front in terms of the dollar amount that they could potentially get for a deed restriction, just through the deed restriction program. Somebody could do this alongside the deed restriction program, if they're asking for that additional subsidy. But again, those deed restrictions, we can work out and add in the language that we want, and it provides some negotiating power there to get a longer deed restriction or whatever it may be. This is meant to be kind of a bare minimum.
My concern would just be that you wouldn't have as many people, if anyone, going for the tier 2 option. if you're going to require basically a permanent deed restriction where they get bought out at the end, I don't think you would get any applicants for the tier 2.
Well, I don't think we're looking for a forced sale. So. Yeah.
I was thinking these were gonna be condos on Eisenhower, what we were talking, you know, top 2 floors, 50% deed restricted and for sale product. It's kind of what I was thinking would apply to.
Right, but a person who builds a 20-unit complex and does tier 2, half of those are affordable. After 30 years, 100% of them can be market rate. They don't have, that owner of that building doesn't have to sell at the end of 30 years. In fact, that's the time that you really cash in.
Well, and that's why I was thinking if they were individually owned, as a full building.
Gotcha.
That we need to reacquire these individually. To retain them in our policy stock.
Gotcha.
If the town maintains the deed restriction program that Sarah was just mentioning, where there's no appreciation cap, the requirement is that you just have someone living within the certain boundaries that we've established. We have different boundaries, so I can't remember which one's which. But just a full-time working resident, that program can still be available unless it's ever terminated by the board. It could be an option for the property owner if they want to, we can encourage that conversation, but yeah, it's where the board wants to do.
30.
Well, the Fraser deed is in forever. So it could provide an opportunity to provide a lump sum payment to lock it down for permanent local workforce. That's on.
Are we ready for, public? Go for it.
Thanks, Parnell Quinn. Mayor, I know one of your core values is transparency. And I was just wondering if the cost of the St. Louis Landing, the development costs so far, are they online where we can look at them to give us an idea if this actually fits with what you're looking at doing? It's also been mentioned that the cost for the infrastructure is the reason for the AMI being at 102%. Do you guys know what the current cost for the infrastructure is? Where we're at?
We have all that documentation. We can give it to you.
In the last presentation too.
Yeah,
Exactly. I'll look through it. Thanks.
Yeah.
So the Fraser Housing Incentive Program requires that at least 50% of the housing units in the project be deed restricted for local workforce housing. Does that apply to St. Louis Landing? The town's plans on rents are about $1,800 to $2,000 a month for a 1-bedroom at the St. Louis Landing based on the AMI. That might sound affordable for people making good money or couples that live together that both work. In Fraser, most of our workers are ski area workers. They're cleaners. They're servers in restaurants. They work for $15 to $30 an hour. They usually work 9 to 10 months a year, not 12. For them, a truly affordable rent would be like $600 to $800 a month. But the homes being built by the town cost way more than that. The only way these workers can afford rent is by sharing a home with roommates, kind of like they did in college. Also, where the incomes. I brought this up at the planning board meeting last week. Many workers in Fraser do not live like families. They are single adults sharing places. So the math that the government uses doesn't really match how people actually live here. To really help the workers who keep the town running, the town of Fraser needs to be the builders that build the lower income housing for the lowest paid workers, not the middle income. The professional developers can build that.
Parnell, if you're asking if this program is going to apply to St. Louis Landing already has, through the development agreement, assurances from the town to provide for property tax abatement, sales and use tax waivers, those different things. This program would not apply to St. Louis Landing.
Okay, but do the rules in it apply? Are you going to make the deed restriction of 50% of the units at least for workforce housing?
Discussion from the board. I mean, we already have a land use covenant recorded for that whole property that 50% of all units for rental or for sale has to be at 120% AMI and below, required by DOLA for the grant that we got to buy the land. But the discussion's been that once construction is finalized, the board would revisit what those deed restrictions are to make sure that we have the ability for the project to cover its expenses through the rental income.
Right, at 120%, that's what the market.
It's not all at 120.
Hold on.
It's 80 to
Average.
At 80 to 120%, that's what the developers, the market rate developers can build. You guys
We're
get,
not seeing that, but
you guys get
Yeah.
tax money.
This
you
is sounding
get
a lot
grants.
like Megan Luther's CBS News request that was on the 5 o'clock news tonight.
Yeah, Ben.
So now the town is building affordable housing, and
I'm sorry,
and
1,800 a month to 2,000 for
We
one
are-
bedroom is not affordable.
We'll do the
There's-
best we can.
There's 12 units on the market right now. for
If you
rent
want to
that
build
nobody's
some
renting.
affordable housing, this is a great opportunity to do it.
I plan on building. We have a lot that we plan on presenting probably in the next 2 weeks.
That's
for affordable
fantastic.
housing.
All right,
take advantage of
thank
this
you.
program.
Any other questions?
No.
There is a resolution on the table if we want to move forward with it.
You always make motions. I'll let somebody else make this resolution. I've been kind of a hog tonight. Keeping things moving. Let's do it. Do the best. Jeez Louise, somebody's got to keep this show moving. All right. I move to approve resolution 2025-0504, adopting the Affordable Housing Fee Incentive Program.
Can we do the ordinance or what as well?
We'll do we'll do them separately. And then I'll approve. Do we need to combine them at the same time? No, and I'll do the ordinance.
Second.
Any further discussion? All in favor?
Aye.
Aye.
Any opposed? Okay. Thank you.
I make a motion to approve the changes to ordinance 523, affordable housing fee incentive.
Second.
Any further discussion? All in favor?
Aye.
Aye.
Any opposed? Okay, motion carries. Thank you, everybody. Moving on to ordinance 522, allow accessory dwelling units by right in LDSF district. Alan, to present.
Good evening, trustees and mayor. Alan Sealis, Assistant Town Planner. Tonight I'll be presenting a proposed code amendment to allow accessory dwelling units, otherwise known as ADUs, in the low density single family zone. Wait a second, here's the presentation. Come on. So just a little background, this code amendment kind of got started back in February. Town staff, Assistant Town Manager Sarah Catanzarite presented a workshop on wider, kind of a broader range of affordable housing topics, things that the town can pursue. Included in that presentation was an overview of information from the Colorado Department of Local Affairs, their Strong Communities program. As part of that program, they have a land use best practices guide that goes through kind of a laundry list or shopping list of different items that local governments can pursue. Some of those include general encouragement of compact development, things through the zoning code, increase in housing diversity, and then different incentives, ideas for incentives for affordable housing development. One of those items which just came before this was an outgrowth of that discussion as well. And then the Planning Commission has had further discussions on some other topics. coming out of that regarding land use code updates. Some of those should be coming forward to the planning commission and the board in kind of a more complete final version here in the coming months. But this item tonight is moving forward kind of first on that as a fairly simple, low-hanging fruit item. You'll see how we'll accomplish that. Just an overview of accessory dwelling units, the zoning requirements. Current zoning standards include a minimum and maximum size, 200 square feet minimum, 1,200 square feet maximum, or 50% of the principal dwelling unit. Other requirements in the code allow it to be attached or detached from principal dwellings. They cannot be separate ownership so that it maintains common ownership on the lot. Minimum requirements for the unit, for utilities, 1 parking space, kind of some basic provisions, but not a whole lot in terms of additional requirements. Tonight's code amendment's not changing any of this. This is just expanding it in one of the zone districts. So here's the current schedule of uses for ADUs. You see that the P going across zone districts is in nearly all zone districts. That's for permitted. That's allowed by right without an additional level of zoning approval. The C is for the conditional use permit. So this is specifically required in the low density single family zone. And what conditional uses require, generally it's kind of a policy statement that these uses are discouraged in these particular zones. We'll see other types of uses, sometimes more impactful, or things that you want to limit in one zone versus another zone. I take this to mean that probably early on when accessory dwelling units were first permitted, there was probably some caution about allowing it town-wide, specifically in the Old Town neighborhood where the zone is. I'm not exactly sure when that first was implemented, but ADUs have been on the book for at least since 2018, I believe, potentially before that. And again, so the purpose statement of conditional uses of kind of additional consideration for neighboring properties, neighborhood character, aesthetics, things like that. It requires an applicant to go through hearings with the planning commission and the board of trustees, subject to 9 additional review criteria outside of the basic requirements for ADUs and other zones. And it basically invites additional scrutiny, and at the end, a conditional use permit could be revoked if they're not in compliance with kind of specific conditions of whatever that particular hearing approved. So as a property owner or a homeowner, if you're going to go through and do a significant investment to do an ADU, having that hanging over your head of potentially it being revoked is a pretty big discouragement if we want to promote additional affordable and attainable housing units in the form of ADUs. So here's the zoning map, just zoomed into Old Town here. The current area that's low density single family is approximately 30 properties or so, kind of in the core 3 blocks of Old Town. Some of these properties are town-owned parks or the school district, but the remaining properties would be roughly 30 here. The code amendment itself, like I referenced, is very simple. It's just replacing that P or that C for conditional use with P, making it consistent with all the other zone districts. This is in line with DOLA's land use best practices, which recommend ADUs outright in all residential zoning. And again, as referenced, ADUs can increase housing diversity more naturally. They're but inherently limited in size, and kind of introduce the concept of a gentle density into an existing neighborhood. And then just a couple of notes to point out that current zoning, if you have an empty lot or if you're redeveloping on a lot and you're just doing a standard single family home, you could potentially do pretty large building footprint, floor area sizes, things like that. That would be more impactful on kind of the urban context of the neighborhood more so than an ADU would be. So next steps, recommendation, planning commission recommended approval of this back at the March 26th meeting. If the ordinance passes, it has to be posted in the newspaper, and then it would take effect 30 days after that. So potentially mid-June 2025 is when this is going to affect. That concludes the presentation. Happy to answer any questions.
Out of curiosity, if, I don't think there's an HOA in this area, but if there was, could the HOA say no to ADUs? Or do they not have that power?
I believe so. It would have to be in their covenants, probably when they were first recorded, but I don't know. That would be a question if the state has overriding.
Yeah, they
on that.
could.
They can be more.
So it's a parallel path. It's a private restriction placed on land versus a government restriction placed on land. Both are enforceable. So if they had that in their restrictive covenants, then yeah, just doing this wouldn't help.
Gotcha.
Yeah.
Any questions?
No.
Okay. Anyone want to make a motion?
Let's see. Same kind of thing. Ordinance or resolution?
Yeah, it'll be ordinance 522.
Okay, I'd like to make a motion to approve ordinance 522, ADUs by right in low density, single family district.
I'll second.
Any further discussion? All in favor?
Aye.
Any opposed? All right, thank you.
Thank you.
Okay. Yeah, just noticed that too. All right, moving on to Liquor and Beer Licensing Authority, public hearing for special event permit, Fraser River Valley Lions.
Bill, I'll present. I'll present to the board and I'll have you come up. Oh, okay, you're fine. I apologize, but can we suspend the Board of Trustees meeting and open the Liquor Licensing Authority?
I move to open the liquor licensing authority board.
And suspend the town board meeting.
We have to close this meeting first.
What, suspend
Well,
it?
Suspend it. But how can I close it?
So
Just
motion to
suspend.
suspend the town board meeting.
Somebody else make the motion.
Motion to suspend the town board. Never done
Thank
that.
you.
Is there a
For the
second?
liquor license.
Second.
Any further discussion? All in favor?
Aye.
Any opposed? Okay, now we can. Yeah, so now we can open we can,
Move to open the Liquor Licensing Authority.
Second.
any further discussion? All in favor?
Aye.
Aye.
Any opposed? Okay. We are in.
Sorry for that confusion. Thank you, Board and Mayor, Antoinette McVeigh, the Fraser Town Clerk. So I did receive a application for a special event permit from the Fraser Valley Lions Club. The Fraser Valley, I can't get it over. Fraser River Valley Lions Club for a special event permit to be held here in the Fraser Town Park, June 22nd. They did make an application to me on March 18th. The Lions Club has paid all the applicable fees and submitted a complete application. This was published in the newspaper on April 23rd, and the Sky High News. Proof of publication was provided in the packet. They propose to serve alcohol beverages to patrons. They will be served by tips trained staff, and they will be identified with a wristband so that they know who there is able to serve alcohol. They are proposing to provide live music and serve beer, wine, soda, wraps, and brats to the patrons. The park around the premise will be marked off with tape, and they will have volunteers present to monitor the park to make sure that no one enters or leaves the park with any alcohol beverages during the event. So the Lions Club did do this event last year. It was a very successful event, and they are hoping to make this an annual event moving forward. So what I am proposing is that the Board of Trustees gives them permission to use the park, which is owned by the town of Fraser. So the Board of Trustees does have to give permission for people to use the park. I'm proposing that they give permission to do an annual event there, which does not include the liquor licensing. That'll be separate, and I'll go over that in a moment. And
if you give annual permission, then we want to do a public hearing every single year before the board for this event. It'd be much like the Festival of Trees is held. Does no longer come before the board. A liquor license, they can still apply for one, but the public hearing is held in the town clerk's office. And if there are no remonstrations provided from the public, then the town clerk can administratively approve a liquor license. And if there are any remonstrations provided, then a public hearing would be held before the town board for that approval. And then, so that's how we could do, so the town, again, the town board could provide that annual approval, and then the town clerk would do the liquor license. Annually, that would have to be done each year. So within the packet, there is a resolution that is provided, 2025-0501, that does allow the board to give permission for this year, June 22nd, 2025, to hold the event in Old Schoolhouse Park from 2 p.m. to 8 p.m. And then the board would give approval for the Lions Club to hold the event annually in the park. And then again, it doesn't say in the code or in the resolution, but the town clerk would do again that liquor license hearing every year. Should there be an issue with any of the ordinances, the liquor code, or resolutions within the town, if any of those would be violated, the town board could revoke this annual approval, and then the annual approval would come back to the board for approval if there were any issues in the future.
Would it be on the same weekend every year?
It would not. The town clerk would work with the applicant to make sure that the date would be approved. And it gives them some flexibility of what works for them.
Was it on a Sunday last year also? Remember? Yeah.
Was it?
Okay.
Yep. So I do have Jill Suffin here to represent the Lions Club. Before she does come up before we open to public comment, we'll want to make sure we open that public hearing up. But the applicant can come and answer any questions that you have.
Okay. So right now, Jill, is she considered, she's the applicant.
She's
We need to open the public hearing now.
Before you hear public comment, yeah. Would be a good time to open it.
Public comment after the applicant.
Okay, after Jill. Okay.
There's not a whole lot more to say. That pretty much covered it. Yeah, last year was extremely successful, way more successful than we even anticipated. And as you might know, we had lost a major source of income, the Lions Club, when we were not able to take care of the campgrounds anymore. That was like $40,000 in income that we lost to not be able to give out to people in the community, or organizations in the community. And so we did a brainstorming session and came up with lots of different ideas. And the one that really materialized was to do this little mini music festival, just a one-day. So yeah, we're hoping to make it an annual event, and we think that this year will probably be even better and bring us more revenue. And we actually are hoping that we can start at 1:30, open the doors, the gates at 1:30, and then start the music at 2 o'clock. And we actually have 4 different bands and artists that will be playing. We have Wade Sutton as the opener, and then we have Kay Irvine, and then we're going to have Joe R. and the Icebox Band, and Puddle Stomp will be the headliner. So it should be a great day.
Yeah.
And we're hoping to get your approval for the special use permit. Okay. And I'm happy to answer any questions.
Do you charge at the gate? Is that the?
There's no charge for admission. And all the money was raised through donations and through the sale of the food, the beer, the wine. That was all donated.
Is there a recommended donation price for walking in?
No, we haven't actually done that. It just says on our posters, free admission.
Yeah.
We ask people to bring their own water bottles, and we provide water, so we're not selling single-use bottles of water.
Yeah. I think you should consider charging an admission.
I kind of thought that too, but the committee seems to want to not have an admission fee. I'm not quite
Because
sure
it is
why.
kind of giving back to the community like the Lions Club would anyways, I guess, so. I mean,
I could propose that to them.
no, I'm saying like you're giving them free admission because, you know, that's what the Lions Club does.
That's
They
what
just
we
give-
do.
Right.
We serve.
Yeah. Makes sense.
And we
okay.
serve lots of food and drinks.
We waive the park rental fee.
What did you say, Ed?
I said, we'll waive the park rental fee.
Which we don't have. Thank you, we appreciate that.
Okay, any other questions for Joe?
Jill, I'd be remiss. I think this is a great opportunity just to take maybe just 1 minute and just talk about some of the programs that you guys use your funding for. I think you have some board members who are very familiar with it. Some staffers are really familiar with it, but a lot of people who are not. I think it's a great chance for you guys to highlight yourselves.
Yes, thank you. So, yeah, basically what we do is we do lots of fundraising and then we give money out to probably 25 or 30 different organizations here in Grand County, nonprofits, advocates, Mountain Family Center, Pet Pals, like lots of them. One of our events that is one of my favorite events is we have all of the organizations represented by one or two people, and we have a luncheon and we give out the checks, and each of the organizations will do just a little presentation about what their organization is all about and what they're going to use the money for. You know, we also have the eyeglasses where we collect eyeglasses and get them out to people. Oh gosh, kind of.
You don't have to list them anymore.
It's pretty incredible. The people that I've met in this organization are just like amazing and how we get stuff done. It's when I showed up at the park last year, we were supposed to get started. I forget what time we were opening, but it was like maybe an hour and a half before, and like nobody was there. And then all of a sudden, everybody started showing up, and it was just like, holy cow! I can't believe we pulled it together the way that we did. So yeah, it's a pretty amazing group of people.
You still have the pancake breakfast in Winter Park?
Yep.
You do? Oh, good.
Yeah, we definitely have those at the art affair. We typically do
Right.
4th of July weekend. We have a new person running the whole show. We lost some of our key members, have moved away, and so other people have been stepping up. So it'll be interesting to see what happens this year.
Jill, what percentage of your donations do you give back to the community?
Pretty much all of it.
Yeah, I just wanted to make that point. It
Mhm.
all goes back in.
Yeah.
It's really good.
And then when do you guys meet?
We have our meetings the first and third Tuesday of each month. And out of the 4 weeks that we meet over the course of 2 months, we have 3 guest speakers that come in. Yeah, the meetings are
Is
usually
it a regular location or does it move?
always at the Church of the Eternal
Okay.
Hills. Yeah.
Downstairs. In that
Yeah,
luncheon room?
downstairs in the lower level there.
Nice.
Yeah.
Very cool.
Great.
Yeah.
Thanks, Joe.
So hopefully we'll get our special use permit and hopefully you guys will all join us because it's a really fun day. And last year we had the signs, the light up signs, which hopefully we'll be able to use those again. And those were instrumental in getting people that would not have known anything about this as people were coming through town and having to deal with the traffic that was like stopped on the highway. So many people ended up coming because they saw the sign. They're like, wow, we could sit here in traffic or we can go hit a music festival. And that really brought in a lot of people and a lot of revenue.
Awesome.
Yeah, we'll be sure to contact CDOT to close the road again.
Sunday, free parking.
Right. Thank you, we appreciate that.
Exactly. All right.
Well, thank you
Um,
so much for having me here.
Absolutely.
Thank you, Jill. It's good to see you, Jill.
Okay, I move to public hearing.
Yes. There you go.
Second?
Any further discussion? All in favor?
Aye.
Hey,
Okay. We are now in public hearing. Is there any member of the public that wants to speak?
Anybody online? Nope.
I move to close the public hearing.
Second.
Any further discussion? All in favor?
I.
Aye.
No. So now we're back in the Liquor and Beer Licensing Authority, correct? And is the resolution the special event permit or the liquor license piece?
It's resolution 2025-0501. It's FII, approving a special event permit for Fraser River Valley Lions Club.
It does both. So Antoinette, just to recap what the mayor said, he's asking that this allows you to do the public hearings in the future in your office.
Correct.
And it also provides this to be an annual event without coming back to the board for individual approval again.
That is correct.
Is there a motion to approve resolution 2025-0501, approving special event permit for Fraser River Valley Lions Club?
Yes, there is.
Is there a second?
Second.
Further discussion? All in favor?
Aye.
Any opposed? Okay, carries. Thank you. Yeah, could I have a motion to close the Liquor and Beer Licensing Authority?
So moved.
Second.
Any further discussion? All in favor?
Aye.
Aye.
Any opposed?
Do they need to re-enter the meeting?
Unsuspend.
Yeah.
Continue.
So motion.
Let's continue our meeting.
All right, to continue the meeting, is there a second?
That.
Any further discussion? All in favor?
Aye.
Any opposed?
Gonna
Okay.
save some money.
All right, we are back.
Glad we don't have to do this again.
Yes. All right. Thank you.
See ya, thanks, Julie.
All right, moving on to resolution 2025-0506, contract with Ranch Creek Waste. Sorry.
Hi again, board and trustees. It's Lorraine Waters, Finance Director. Tonight, the matter before the board is discussion and possible motion to move forward with a contract to replace waste management with Ranch Creek Waste at the Drop. Full disclosure, when I was at Millworks Construction, I worked with Ranch Creek, so I just wanted to make that known. But we did have a good experience working with Ranch Creek, but I just wanted you to know, I know who they are. Background, the town of Fraser is contracted with the has contracted the waste recycling services for the Drop with Waste Management since the facility is open. With the increase in costs and fees implemented by Waste Management, the break-even line for the Drop has not met expectations. The cost information, the April invoice from Waste Management totaled $7,453.05. There was an additional pickup. They had a March 11th 6-yard dumpster service for 4 dumpsters, recycle, $1,080. And then April 1st, they did the 6-yard dumpster service for 4 dumpsters at $2,380.98. 6-yard dumpster service recycled $2,533.92. And then the recyclable material offset fee of $533. The energy surcharge, $916.63. And then, I'm sorry, I am so ashamed, there was a typo. The administrative fee was $8.50. I was writing this very quickly with an audit. Yeah, there's a lot going on. But the total fees for that month alone was $1,458.15 in fees alone. Ranch Creek has proposed 10 6-yard recycle containers, 2 times a week pickup. One after Wednesday and one after Sunday. $290 each per month for a total of $2,900 per month. The quantity 6-yard trash containers, same pickup available. That monthly total was $1,920. total cost $4,820 a month. All of their pricing is a flat rate. There's no fees, no fuel surcharge, no fees. They have the locking bars, so they're the locking bars just like the ones up there right now. They also have the 20-yard recycle roll-off for our big roll-off days. $500 pickup, 20-yard trash, $650 pickup, 30-yard trash, $850 pickup. And that's a 30-yard roll-off, so really big. And if you would choose to add a separate roll-off for just metal, they would empty that each time for $200. So, recommendation of the town staff is that the Board of Trustees discuss and evaluate the contracted rates as provided by Ranch Creek Waste and approve the town manager to enter a contract with Ranch Creek Waste for services at the drop. A motion may be made to move forward and a resolution approving the town manager to contract with Ranch Creek Waste. I do need to make one little correction on the resolution, which it's highlighted here. I have the copy that's highlighted. I forgot to put in the optional roll-off for metalled emptied at $200 each. So that's the only addition. But the resolution does read, the Town of Fraser Trustees authorize the town manager to enter into contract with Ranch Creek Waste for the drop facility recycling and trash, plus roll-off services for $4,820 per month, plus roll-offs 20-yard, 500. That's recycle, 20-yard trash, 650, 30-yard trash, 850, and the additional of the metal.
Metal
So-
recycle, which is only 200.
Same service schedule, same number of dumpsters, same ability to provide roll-offs for overflow, which we need at the drop.
Yes.
And I think we're looking at 20% savings in costs. Drop, it costs in 2024, it costs $85,000 to operate that facility for 2024. Revenues were about $65,000, so there's about a 30% gap. This will make this more of a standalone facility, which is fantastic. And I've heard nothing but good things about Ranch Creek.
I have both. I have one business has waste management and one has Ranch Creek Waste, and Ranch Creek Waste is way better. Cheaper, easier. They don't complain when it's icy. They get there, you know?
Yeah, they do.
Lewis, you have a question?
Yeah, I think this makes total sense financially, but I'm wondering, is this facility just for Fraser residents, or do we provide this for the county? And if so, do we get funding, or do people have to pay if they're not a Fraser resident?
You haven't been to the
it's-
drop.
I have, but I have,
On Dog Day.
we have our own trash in Grand Park, but I'm just wondering, are we subsidizing this facility for the whole county, or anybody that wants to come by there?
So great question, trustee, Gregory. This is really available to anyone. Part of the whole scope of this project, the first place was to address a lot of dumpster poaching that was taking place in the valley. And also providing an opportunity for homeowners to drop off their trash on like a Sunday, versus leaving their push cart out maybe at the curb. I know that for Grand Park, you guys have that dumpster enclosure, but for a lot of homeowners, they would push out their whatever you would call it, their tote out to the curb and leave it there for a couple days if they're leaving town. And a lot of times those led into wildlife interactions that were not favorable. And this just provides an option too to help individuals and households lower their waste generation by buying these yellow trash bags that are for sale at Safeway, Burdocks, Ace Hardware, and at the drop. Basically, you purchase these bags for $8.50 a bag, and the less trash you generate, the less that you pay for your monthly trash bill. In addition to that, we also have the recycling component, which again is available to everyone. And everyone, primarily residential users. We do have some policies about commercial users with large events of wine bottles and such. But this is available to everyone, and that was the intent of this project from the beginning. This is one of the first things that I worked on when I got here, and it's available to everybody. And I get calls on a regular basis about how this operation works and interest, and I'm glad to see that it's going well.
Okay, and I believe we also get 10 cents of the 20 cents for every reusable bag or disposable bag, like Safeway.
Yeah.
When we first started that project, we get 10 cents a bag and 10 cents goes to Safeway for managing. So people from anyone that shops at Safeway help support the cost of the drop.
So Trustee Souls, I don't want to get confused, the
Sure.
disposable bag fee.
Yeah, not
That's-
disposable, excuse me, but they're, yeah, it is disposable.
Plastic bag fees.
These are two different.
Those, the plastic bag fees are the grocery, the $8.50 per big yellow bag
Right.
is the drop.
Right.
That
I'm
were-
thinking about just the 20-cent bag
Yeah.
fee
Okay.
that we established before the governor mandated it.
Yeah.
And if you're speaking to on terms of sustainability, yes, they're able to use 50% of those revenues to go towards energy efficiencies and different things like that for their building.
Yeah, and Safeway also.
Safeway as well.
And then we get the other 50% for the drop.
That's right.
Is recycling free up there?
It is free, and they do take donations. We get a lot of great revenue from donations, and we have a lot of members of the public who appreciate the operation, and the donations are fantastic, and it helps support the whole operation, which is great.
So is the disposable bag income included in that 65,000?
No, that's separate. We have that separated out from our budget. So if you look at our budget, you'll see the drop for expenditures, $85,000 for 2024. If you search PAYT, pay as you throw, is the yellow trash bags that we sell. And those are the revenues. In addition, I think you include the tips, donations in there as well.
But that's.
Yeah.
65,000.
65,000, correct. So we're covering about 70, 75 rough
Great, I
math.
think this is a move that gets us in the line to
Yeah.
less subsidy. And
It's a local company. Yeah.
seems,
Right.
why wouldn't we?
Yeah, and also a question was asked that what are they doing with their recyclables? Rob immediately responded last night to my email. They've started doing their own sorting and baling at their transfer station in Granby, but also taking single stream recycling to Boulder County and Republic Recycling Center in Denver.
All right, awesome. The public has big life. So I would recommend if we do have room up there to get a 20-yard for metals and advertise that. Because I know over the years, I've had a lot of metals in my yard, and it's interesting that it's much less fall. We've got our free trash day coming up. In the past, I don't know, have we had a separate container for metals?
I don't think so.
So at $200 for a roll off versus 500 or 600, it's worth it.
I think there's been attempts at it, but then there's been issues where, like people will just kind
Contamination.
of swarm the place and once it gets contaminated, then
Yeah.
it's not. I think if we had a specific set, we have new signage up at the drop now for, all of the things that Michael just discussed. But I think we need to do some serious signage on the metal container.
Yep.
It says metal only.
Metal only, all
And
the way around,
big,
real big letters.
really big letters.
Yeah.
And because I do know
And
there
tucked
was
away.
attempts, but then, they get overrun up there. Sometimes
trash
it's
day.
really, really busy.
Yeah, I think
And so, I think we could try and keep that separate.
Take a look at it and see if we can find maybe a local individual who would like to collect that. I don't know. There's some
We'll
different.
collect it. We don't have,
So
So-
Ranch Creek that's not going to offer.
Yeah.
metals.
Yeah,
Yeah, it's right there.
$200.
It's right there.
$200 for that.
Optional
She left it
roll
off
off,
the ordinance, but it's in their proposal.
emptied at $200 each time.
Oh, right.
Optional.
Got it.
That was the yellow part,
Right.
Michael.
versus the other roll-offs are more than twice that.
Well, because they make money off it.
Yeah.
They take it
And there's
down.
money off the steel.
Yeah.
So that's why I think that we have all the money we're saving. Let's have a bin for metal recycling and we can sprinkle the signage on it first thing, tuck it away in the corner.
Yeah.
People can
All right.
bring in their bed
Monitor it.
frames.
Should we make a
and-
motion?
Make a motion.
Keep this moving.
Well,
Katie
actually,
Cole.
Oh,
this-
I'm not supposed to
hey,
say that.
I'll
This
make
is,
the motion, being the old recycler that I am, that we approve resolution 2025-0506 contract with Ranch Creek Waste, and it'll include that metal roll-off.
Second.
Further discussion? All in
Yeah,
favor?
I
Aye.
don't think I got my question answered. Is anybody else up, helping us fund
No.
the drop,
No.
or is it not? Do we
The
get
answer is
any?
No,
No?
we don't. We do not receive any funding from any other entity.
It seems to be problematic to me that we're providing a
great program,
resource for the
Louis.
county. No, I think it's a great program, but I think, if we're providing a resource for, other people in the county, that seems like they should help, fund it too.
If they come here to drop off their recycle, they're gonna swing down to Rocky Mountain Roastery,
Let's,
they're gonna
let's,
stop at Murdoch.
let's table that for a topic. in the
Okay.
future.
Okay, there's a motion on the floor for county residents.
There's a resolution that is seconded. All in favor?
Aye.
Any opposed?
All right.
All right, motion carries.
All right.
10 minutes was
Okay.
Okay. Updates. Anybody on the board have an update? I have a couple updates. A big day on Monday. Governor approved passenger rail transit to Winter Park, Fraser, Granby for every day of the year, starting November 1st, 2026.
Woo!
So it'll be a train that departs Union Station at 10 a.m., returns at 5 p.m. each day. I think it's a great start. Obviously not that helpful for commuters trying to live up here and go down to Denver. But as I've mentioned on Facebook to some naysayers, this is a start. This is infrastructure. All the infrastructure's down there, all the employees are down there. So let's get this going and then we can expand it from there. I think it's a huge step and a great way to promote this area and bring people up here.
Where's the stop? Is it Fraser or?
It'll stop at Winter Park Resort, Fraser, and Granby.
Dang.
Yep. Every day. So yeah, I think it's a great thing.
And it leaves Denver at 10?
Yep, leaves Denver at 10. So
Union Station.
leaves Union Station. Yep. So question was asked, how many people does that really help? And it's a fair question. So I asked DIA staff how many flights land before 8:31 a.m. So kind of the last, whatever. 92 flights land at Denver International Airport before 8:30. If there's 200 people on a 737, that's 18,400 people each day that could land in Denver, get on the A train, take it to Union Station, and then take the train up here. So it's a pretty significant number. Obviously, it's not covering the whole day. The 1,600 flights a day that come into to Denver International Airport. But again, it's a start, and I think it's great.
Yeah. Where's it continue on to? Does it stop at Steamboat or?
Not yet. So they've only committed to Granby.
It stays in Granby till it comes back.
Yep. Yeah, it's a lot like the ski train. It'll just sit in Granby all day.
Perfect. So sit in Fraser all day.
Yeah, that's true.
Love that. Like the fumes and stuff? Yeah. Right by our houses, it was just like too much. Stoked.
Yep.
Perfect.
Also just on the train note, I did have a conversation with the CDOT rail team about a whistleless crossing and the fact that it should be pretty easy to make our stop or our pass through here whistleless if we want to do that. With increased train service, I think that's probably something we want to look into.
And they think it'll be easy now. If they changed it, that'd be great.
Mhm.
Because the old system was not easy. Right, look into it.
Yeah.
You still see that?
Works for me.
Yeah, that was the CDOT rail team.
I spent a lot of my life like this.
You don't like
It doesn't, it doesn't bother
There
me,
was-
but I think if we quadruple the trains as we develop the downtown, the businesses and residences that we're gonna have upstairs, probably appreciate it.
Bothers me, and I've worked there for 50 years. I have to plug my ears. But anyway, okay, good. That's good news.
Yep, it's good news. Yeah, big thanks to specifically John Putnam was the one who negotiated for CDOT. But Union Pacific Rail was on the other side of the table and they got it done in a matter of months where it usually takes years.
So it wouldn't be like the Vasquez one with all the, like, it needs so much lead time, I feel like. Like, I mean, distance, do it.
What?
What's Los Crossing? Like the
Oh.
median, it's like 20 yards. I don't think we have the.
There's other options of double gates and
Okay.
there's several ways to. skin
What
that
happens
cat.
when the gate doesn't work?
But yeah, the medians.
Like
we've
it
got-
does.
Then we gotta
Cut
go
off.
around.
Well, you can't with a whistle.
The parkway.
Oh.
Yeah, go underneath.
If it was medians.
Oh, the other big thing with this Moffett tunnel negotiation, first of all, it's for 25 years, not 99 like the last one. But it puts a priority for passenger rail over freight.
Yeah, for the
So-
25-year period.
So trains
Which is
will be
big.
on time.
Viable.
Yeah.
That was big.
As on
getting
time as
that
they
in
can.
there.
It's a big negotiation with UPR.
Yeah. It's huge.
So who pays to maintain the tunnel now
Union
that
Pacific.
it's Union Pacific?
I believe, I don't know all the details of the lease agreement.
Because,
But
yeah.
I believe there's no money exchanged.
Wow.
They have to maintain the tunnel and that's probably cost enough.
Oh, yeah. It's old, what, 1923?
Yeah, in the 20s is when it opened.
Yeah. 102 years old.
Yeah,
That it?
I already mentioned the news, so I don't need to revisit that.
You mentioned, when is the cleanup day?
June 1st is the cleanup day.
That's a Sunday.
It is.
Day after graduation. Wait, is graduation on Friday or Saturday? Graduation's the 31st this year. It's on Saturday.
Are we doing a tree drawing this year? I know in years past we've given out trees and it's been on a lottery system. Is that something we're doing again?
I think that the gardening crew, they budget for that every year. I think they're doing it again this year.
The public doesn't. Yeah,
I got
I guess I don't know where to sign. Our public doesn't.
So
so,
I'll speak to that if you like. I know last year they weren't able to give the trees away because Kathleen just wasn't able to secure any or purchase any.
Okay.
But the last several years, she's made it first come, first serve and not allowed people to sign up for it. It's just been too much work for their staff. I don't know, but we can ask Kathleen and bring that back to the board and see if that's gonna happen this year, when she'll do that.
Or is that the baskets for the businesses or?
No, that's the trees. She gets trees just for the residents of Fraser
Okay.
to pick up and purchase for their homes. They are doing the baskets again this year for the Fraser businesses.
Nice.
All right, I've got several updates.
Several?
Several. We did have a JFOC meeting last week. A few items to discuss was we have kicked off an approval. The proposal was approved for the design work to take place at the plant, which is going to provide support design and project management for a lot of outstanding improvements that we need to do at the plant. So that was a great thing. We did discuss the industrial pre-treatment letter that was sent to all the local breweries and distilleries. And that Grand County Sanitation District number 1 is working with their attorney to adopt that in their sanitation district as well. We also had some proposals for new general counsel for the plant and for the JFOC, who was going to work with the town of Fraser as a managing entity. The kind of recommendation and guidance from the JFOC was to take a step back. The 3 sanitation managers, along with Gene Rorden, who's our current general counsel for the plant, will review the proposals and bring a recommendation at the next quarterly JFOC meeting. Also, you may hear about some issues with the plant with the filters being down. that the filter plant has been shut down. This is, it's not the primary plant. I just want to be real clear with that in case you hear some concerned citizens. The primary component of the wastewater plant is still fully operational. It's the external, the new building that was built in 2018, finished in 2018, I believe, which is, it filters metals during the wastewater treatment process before it goes back through the ultraviolet sanitation room before it goes back into the river. So working on that. We have those filters on order. We have someone lined up to do the work. Looking to have this filter plant, these filters reinstalled and operational again by July. So just letting you know that's the update there, that it's not the primary plant. We're still treating wastewater and we're doing a good job with it. For the town board retreat that was referenced by the comprehensive plan folks, I did send out a doodle poll to everyone. If you haven't had a chance, please look at that and fill out your availability. The June 19th and 20 did not work for some trustees, so we're going to just reschedule that.
So it was 7, because I looked on it and there was the dates in July, the early July, late, it was 7 and 7 with my contribution. So is that just board, and does that take care of it?
No, there's a lot of people involved for this
Okay.
retreat. So
All right.
part of that is me evaluating trustees who are available. That's really the primary focus. And then maybe some key staff to be there as needed for the certain agenda items. And then the availability for Frisco to be able to host us at the town of Frisco, in addition to a couple other consultants who'll be working too. So please, when you get a chance, fill that out. Clayton Court, we are actively having appraisals completed for the strips of right-of-way along Clayton Court. We are also working with Ken and his staff on agreements for that right-of-way exchange. Following that appraisal and discussion, that'll come to the board once those items are complete, and have a discussion about the appraisals and what makes sense to hopefully find some agreements for acquiring the right-of-way needed to go from a 50-foot right-of-way to a 60-foot right-of-way on Clayton Court. Working with Kent's office to make sure that we're checking all the boxes for that, and that there'll be a proper ordinance in place when we're ready to do that as well. Additionally, with that, we are looking at a reimbursement agreement for anyone when they go to develop their property. The board can put certain requirements in place so that anyone who goes to develop a piece of property for which they were paid given whichever property we're looking at, that reimbursement agreement will be brought to the board with a recommendation. The board can make the final changes to that. And basically, when someone goes to develop piece of property for which we compensated for the right-of-way, requiring them to pay some proration of the public infrastructure that was constructed on that. So those will all be brought at the same time so that everyone has good expectations moving forward. And it's a complicated process, but we're working through it. We'll have it here soon. We had a pre-bid walkthrough meeting today for the historic church renovation that the board approved. We had 5 firms show up for that, so that's fantastic. We have good interest, and hopefully be getting final bids here soon, and that coming to the board with the recommendation for that renovation at the historic church. Sidewalk project will kick off on June 16th and hopefully be completed by mid-July. The contractor thinks they can get it done in 2 weeks, but we're just telling people 4 weeks.
Yeah.
And that is
Disruption there.
I don't know the name of the firm. WS. Anyway, I can get you that, Katie.
And this is Nordgren and Eisenhower.
Norgren, Eisenhower, curb and gutter in front of like Camber Brewery and some of those other areas, and some of the sidewalks near the rec center as well that have been chewed up pretty heavily by snowplows. So we'll continue to budget this and bring this to the board every year. Continue annual sidewalk maintenance every single year. Additionally, the town hall renovation that the board approved. The pre-construction meeting is next week with the contractor who was awarded that project. MW Golden, I believe, is the contractor. And we'll be having a pre-construction meeting next week and have a timeline after that meeting. So things are moving.
And all these are placed on BidNet, right? All these.
They're all in BidNet.
A lot of stuff. Fire local, I'm like, it's on BidNet. You have to go to BidNet. Any government contract, right?
Yeah.
Yeah.
Right.
Okay. I just want to make sure I was right.
That's all I have.
Yeah.
I've got one more. We did receive a grant from Open Lands, Rivers and Trails towards the connecting trails in the bike park for $61,360. So we are up to, with the town contribution, the Fraser Valley Rec District contribution, various grants, fundraising, $986,160. So we're still a little bit short, so we'll be looking for more donations and sponsorships. So if you do have any businesses or entities in mind that might be good to hit up, let me know. But we are hoping to bring an update to the board shortly, but looking to break ground hopefully in July.
What are we short, about 200,000? More?
Probably. Avid's last budget that they gave us was close to 1.2 million. So they were working on bringing that down, but then we'll have some landscaping costs and likely a water tower purchase. So trying to get that total budget between 1.1 and 1.2, hopefully.
Great. Good job.
Sir, is the bike park going to be accessible via other paths to get to the new hotel planned there in Rendezvous?
Yes, Michael.
Oh, fantastic.
You could jump on your bike.
Here, you got to stay this whole time just for that.
So do you know the April 21st meeting of the Fraser River Valley Housing Partnership and their board, how did they vote regarding support for our project?
So we did not have a finalized grant agreement yet. We're hoping that we have a meeting with them tomorrow, hoping that we can have a finalized grant agreement ready for their meeting on this coming Monday.
Okay.
So we're continuing providing the updates about it, answering questions about the project, and to what the mayor mentioned earlier, we had a surprise visit from CBS News, and we were on the 5 o'clock today.
Awesome.
So talking about the project, and feel free to look that up.
Awesome. And then Big Valley, I was just looking at my notes from our last meeting. We did release, let's see, Big Valley additional scope release for infrastructure. Did we do that so that they can get started?
It's
Is
a
that
good question.
something-
I can follow with Paul and get an answer. So part of this was them addressing certain comments before we release a scope of construction.
Okay.
That was the only conflict that we were working through.
Okay.
And it's working with JVA engineering team to make sure that we have approved plans before they do any work for these different increased or released portions of work.
Okay. Because that was the one ASAP on here for them to get moving.
Right, but it's also in their court, at least with their engineering firm.
Okay,
so there's a balance there that we're trying to maintain.
Thank
question.
Anything else?
I move to adjourn.
Second. Any further discussion? All in favor?
Thank you.
Aye.
And
All right.
thanks
Thanks, everybody.
guys for